Hi, good afternoon, everyone. This is Malvika Nair here. I'm a GYLP of the batch of 2020, and I'm from the Indian School of Business.
Good afternoon, everyone. My name is Niranjan Rati, and I joined Bajaj Finserv in 2020, also as a GYLP associate. I'm from IMT Ghaziabad. Interestingly, so I was also 2 years back the national finalist in Atom Season 2. We welcome you all to Atom Season 4, CEO's Challenge.
So, what is Atom? Atom is designed to reflect what we need to do today to be ready for tomorrow. The name Atom is derived from a fundamental unit of creation, and it provides a platform for young minds like you to create something big, revolutionizing the financial services industry.
So, what's new this year? So, this year, Atom CEO's Challenge is a new proposition wherein participants will work on futuristic problem statements that are handpicked by CEOs themselves. The competition provides you with an opportunity not just to ideate and build solution, but also get guidance from industry experts, that is the company CEO themselves.
In the past 4 years, Atom has seen an overwhelming response, and this year was no different. Yet again, we saw a growing participation from the 17 hand-picked B schools with a registration of around 1,200 teams. The first round was a seed pitch round where the teams presented their idea in brief. The 44 teams that were selected, who presented the most compelling and innovative ideas, then moved on to the next round, which was the Series A round. Here, they were asked to present a comprehensive plan for the problem statement in question.
Post the Series A round, the top 13 teams had a jamming session with the leaders, followed by a Series B round with the CEO's office. As the competition got tougher, the rigor of panelists also became more, and today we have the 5 final teams who have constantly showed their mind.
All the finalists will get a PPI for the most coveted GYLP program. In fact, if we see the last two batches, around 40 to 50% of the GYLPs come through the PPI or the PPO route. Also, winners will get a cash prize of rupees 5 lakhs, runners up will get a cash prize of rupees 3 lakhs, and the top investors will get rupees 1 lakh.
Also about the GYLP program as such, the GYLP program is designed to give you a holistic understanding of the business, wherein the first 18 months are dedicated to building exposure across group companies with 3 high-impact projects, one in each company. These projects will be across business strategy, operations, sales, product, etc.
So, what is in the GYLP program and what do you get to learn out of it? Talking from my own experience, I would state 3 things. One, the understanding of the core values of the different group companies across Bajaj Finserv. Second, through my stint as a GYLP, I got to learn app development, which was something that I didn't expect myself to do coming from a non-computer science background. I did that for a year. And finally, I got the biggest opportunity to work with Mr. Tapan Singhal himself. I was working with the CEO of Baazigar as a part of the CEO's office. So, Niranjan, what did you learn from the GYLP program?
Malvika, if I have to summarize my experience in 3 short lines, in my first role, I got an exposure to the payments industry. Whereas in the second and the third stint, I got the opportunity to work with Ganesh Mohan, CEO designate of Bajaj Finserv AMC, and also one of our panelists today. All in all, I had a great experience working as a GYL.
Great. So I think it's time now that we introduce our panelists for today. So everyone, to introduce the panelists, I'll go first with Mr. Tapan Singhal. Tapan Singhal is one of the founding members of Bajaj Allianz General Insurance Company. Under his leadership as MD and CEO of Baazigar, Baazigar has been recognized as one of the best general insurers in Asia with over 12 crore customers and a wide distribution network spanning across more than 1,100 locations pan-India. He has also won the CEO of the Year for India and Asia Pacific region at the IDC Future Enterprise Awards 2021.
Thank you.
Let me introduce. Yeah.
Welcome, sir.
Let me introduce Tarun Chugh. Tarun Chugh is the MD and CEO at Bajaj Allianz Life. Under his leadership, BALIC has introduced several industry-first initiatives in the life insurance sector. Tarun is also appointed as the member of Governing Council of Insurance Information Bureau of India. He is also an elected member of Executive Committee of Life Council of India, Board of Governor member of IIM Sambalpur, and Advisory Board member of Christ Lavasa.
Coming to Mr. Rakesh Bhatt. Rakesh Bhatt has been leading our startup FinServe Markets over the last 3 years. Before this, he was CEO for 9 years at Bajaj Finance, wherein he led operations, technology, analytics, and customer experience to deliver technology led solutions and laid a strong foundation for the company's growth.
Uh, the next panelist is Anup Saha. Anup Saha is the Deputy CEO of Bajaj Finance and is responsible for leading the urban consumer business, the SME business, the digital products, lifestyle products, personal loans, cards, wallets, business and professional loans. He is also responsible for operations, services, and marketing.
Next, we have Mr. Devang Modi. Mr. Devang Modi is the CEO at Bajaj FinServe Health Limited, which is a new startup health tech company in the Bajaj FinServe group. He was the architect of the no-cost EMI loans for the consumer durable segment, which has close to 3 crore customers today. Previously, he oversaw personal loans to salaried and self-employed, credit cards, and digital wallet businesses.
Let me introduce Mr. Ganesh Mohan. Ganesh Mohan is the CEO designate of Bajaj Finserve AMC. Ganesh is also the group head of strategy for Bajaj Finserve. He has been involved in defining innovative go-to-market strategies and developing segmented approaches for the group's large customer franchise. Prior to joining Bajaj Finserve, Ganesh was a partner and managing director with Boston Consulting Group. He has worked with them in the US, Europe, Middle East, and India offices.
So once again, welcome to all our panelists. Now for the time we've all been waiting for. Teams, I hope you're all ready and geared up for your presentations. So calling up, without any further ado, calling upon the first team for today, we have team Vintage Fin from IIM Kozhikode. The team members are Akshay, Shilki, Vipul, and Anshul. Over to you, team Vintage Fin.
All the best.
Good afternoon, everyone. Welcome to our presentation. We are Team Vintage Fin, and today we are going to talk about product proposition and strategy for Bajaj FinServe Pay. Next slide, please. We have Akshay and Vipul in our team who are CAs. Shilki is from IT background, and I'm Anshul, a graduate from LSR and an Aditya Birla scholar. First, we will talk about the overall market and primary research. Then we will talk about the solutions we proposed alongside their benefits and implementation. And then we will introduce marketing strategies. And then finally, we will run you through our revenue model. Talking about the overall market, owing to COVID, UPI has shown tremendous growth. As of February 2021, nearly 2.3 billion transactions were carried out through UPI interface in India. From Q3 of 2021, UPI recorded a 103% increase in volume and close to 100% increase in value. Further, as per MD and CEO of NPCI, it is expected to further have 1 billion transactions a day on UPI in 3 to 5 years time period. Through our primary research, we found only 15% were aware of Bajaj FinServe app, but however, the sample size was fairly small at 525 people. And in our secondary research, we found out about the internet penetration that stood at 50% in 2020 and the active UPI users per month, as well as the users that have installed Bajaj FinServe app. In our research, we also found out the major sectors contributing to UPI growth, which came out to be e-commerce and UPI wallet transaction ratio over the years. Next slide. Talking about the market trends, digital payments are expected to more than double, driven by mobile payments, digital payment adoption by merchants and non-traditional merchants, as well as digital banking products. The digital payments by value are expected to grow by a CAGR of 17%, whereas digital payments by volume are expected to grow by a CAGR of 30%. Next slide. Coming to competitor analysis, we saw that the market is majorly dominated by PhonePe and Google Pay. Further, we divided our analysis into 4 segments of Bajaj FinServe Pay and did competitor analysis in payments, financial services, payment gateways, as well as ancillaries, while studying the characteristics and features of the companies that we could take into account for Bajaj Finserv Pay. We studied PhonePe model and understood how they adopted the strategy of diving into tier 2 and 3 cities via retail merchants. We did a basic in-app feature comparison and highlighted the differences and found out that Bajaj Finserv Pay did not really lack in the segments. However, it could dive into groceries purchase and merchandises, travel bookings further, as well as car rides and investments. Next slide, please. Yes. Coming to the business model, we have created a canvas to understand the key business areas. On right-hand side, we have marketing-related aspects. On left-hand side, we have key operations. And at the bottom, we have cost structure and revenue streams. Next slide. Coming to our proposed features, we have divided our features into two segments targeted towards existing customers and new customer traction. For existing customers, we have proposed UI and customer support, leaderboard and monthly reports, cross-border UPI payments. For new customer transaction, we have proposed share financing, cross-selling, and community lending. Over to Akshay.
Thank you, Anshul. Now, first we will target our existing customer retention. The first idea which we have focused is user interface and customer support, and the target market is general public at large. The foremost thing which is visible on the face of any user is the UI of the app, which is why the app should be user-friendly with simplified feature and better app navigation. Also, placement of the most frequently accessed features like wallet and UPI payment should be at the place where the thumb touches the screen first, so that it becomes convenient for the user. As indicated by the study, approximately 48% of the people use phone with one hand where the thumb touches the center of the screen, and thus we have tried to create a wireframe to showcase the view of the app after the changes, along with the notification of due bill payment at the top of the home page. We have also planned to upgrade the chat box to research-based knowledgeable chat box features to make the user experience easier. Also, we have added an additional information tab for the users to educate them regarding the investments and basic tax planning like ATC investments, or how to avail an HRA deductions, or how to increase the cover of premium to 40,000 and still you can get an extra tax deduction. This will help us to generate the repeat user engagement for in the app. The next feature, next slide. The next feature is leaderboard and monthly reports, and the target market is the youth in the age group of 15 to 40. Here the customers will be allotted a ranking based on the monthly spending, although it will be an optional feature to make yourself visible on the leaderboard for other users. There is a study which says that a gamification stimulates competition within others, and accordingly, there is a social comparison comes place. And according on this theory, our overall idea is made. This platform will enable a feature to challenge their friends and peers in the leaderboard list, and accordingly, winners will be incentivized based on the monthly spending. The feature will also help the user to create a credit report, feasibility report, and the CIBIL report based on the overall spending pattern, and it will help to obtain a cash credit limit based on their track records from Bajaj Finserv, and thus leading to repeat customers. The next feature, next slide please. Next feature is cross-border UPI payments for outward remittances, and the target market is majorly the travelers and the non-resident Indians. We have planned to offer a real-time cross-border remittances in India using a UPI ID for its MTO partners through connection with the UPI payment system. In simple terms, any person who is traveling out of India can transfer its money to India using a UPI-based system. This plan is already in pilot scale, whereby the international arm of NPCI has partnered with the Liquid Group, a leading cross-border digital payments provider, to enable a UPI QR-based payment acceptance in 10 markets across North Asia and Southeast Asia. And as per the latest update, Nepal has already begun the first country to deploy the India's UPI. And thus, the overall plan will help to provide a big chunk of market of 2 million merchants with the UPI QR code system across the covered region. Now, Vipul will take over for the new customer traction.
Thank you, Akshay. For the traction of new customers, we have proposed to have 3 new features. Next slide. The first one is shared financing. So this feature actually has 2 parts. The first is group chat for bill splitting and payments. And the second one is business chat, which will include invoice payments tracking and reminders, etc. So this bill splitting feature is specifically focused on millennials and in overall will be used for everyone. Talking about group chat, any group can split their bills. They can even poke their friends in the app itself as a reminder to pay. In addition to that, they can also add the invoice with a small description for the future references. So the students or the professional can use this feature when they go out on a trip or to some restaurants for their convenience. As far as business chat is concerned, there will be two separate tabs in the business chat. The one tab will include all the offers that has been circulated by the merchant in general, and the primary tab. The merchant can take order and can also request for the payment on the chat itself. For example, I want to buy bread and butter. So I'll just simply send this item name to the nearby shopkeeper. Then the shopkeeper can send the invoice and the payment request through the app. And I also will be able to track for any future references. Further, the merchant can also track the customer payments or can also track the credit sales, if any. They can look over the balances and send reminders as well. Furthermore, there will also be a column which will display a hypothetical interest lost by the shopkeepers on the credit sales if charged with a specific interest rate. The next feature is cross-selling. As the name indicates, in this feature, we will try to sell other Bajaj products or offerings. Like the feature will introduce a threshold payment concept with the added benefit of reduction in the insurance premium, discount coupons, and other benefits. So introducing membership cards in the grade of platinum, gold, silver, which can be availed by reaching a monthly transaction limit on the payment for each grade. The benefit can be reaped through cashback offers on any of the Bajaj products or services. These limits and offers to be upgraded with time in accordance with the company's savings in terms of commission paid to the third parties and the existing market conditions. Further, this feature can be differentiated in two categories. One is for the merchants and other for the individuals. The offers and limits will also be different. For the merchants, monthly transaction limits can be platinum 5 million, gold 2 million, silver 0.5 million. And for the individuals, it can be a lot less. With respect to offers, we can also customize like more general and vehicle insurance discount to merchants and more bill payments offers to individuals. So the next feature is community lending. Here we are targeting small and medium merchants who might also in need of loan facility. Here, Bajaj will provide a flexible loan limit of up to 5,000 per person with minimal or no documentation. However, in order to increase that limit, the person needs to come with proper documentation. The other alternative that we propose is we can form an association of person, AOP. Any 5 or more person can come together and form an association. Now, the members of the association can extend their loan limit on the basis of their app usage over the last 3 months. The limits are evaluated at the association level and the money will also be dispersed at the association level itself. And it's the decision of the association on how much money will be provided to each member. So if one member defaults on the payment, the whole of the association will be liable to pay on the behalf of that person. Further, the probability of default by an association is a lot less than probability of default by an individual. And for the future purposes, the details of the defaultee will also be shared with the banks, which will create difficulty for them to take any credit card or two-wheeler or any house loan in future for the banking system. For the implementation part, we'll also use the existing distribution network of the Bajaj. We can provide them with basic training and incentive to say 50 to 100 bucks to provide to carry out the KYC to onboard each merchant in the local places. Ultimately, these 3 features will provide a value addition to the merchants and will also ultimately help to acquire them. The next slide. Okay, we have created this feature prioritization considering the efforts Bajaj need to make and the impact that will turn out from these features. Now Shilki will take over.
मेरे पास 5,720 रुपए हैं. दुकान के सामान के लिए मुझे 10,000 चाहिए. तो चलो मैनेज करने का कोशिश करता हूँ फिर मैं. ठीक है, चलो चलते हैं.
पापा मुझे स्कूल के एडमिशन के लिए 2,000 रुपए चाहिए. दो ना.
अभी तो कर रहा था बेटा, लेकिन चलो ठीक है. ये
थैंक यू पापा.
तो रुपए ही नहीं बचे. चलो ठीक है.
तो रुपयों का इंतजाम कैसे होगा?
अरे भाई क्या हुआ, बहुत परेशान लग रहे हो?
भाई मुझे रुपयों की बहुत सख्त जरूरत है, मेरे पास नहीं है.
क्या तुमने बजाज फिनसर्व पे के बारे में नहीं सुना? उसमें एक नया फीचर है कम्युनिटी लैंडिंग, जो जरूरतमंद लोगों को कम ब्याज दर पे लोन देता है.
अच्छा, ये देखो उसका ऐप. लेकिन मेरे पास तो देने के लिए कोलैटरल या कोई पैन कार्ड वगैरह नहीं है.
अरे उसके लिए तुमको कोई कोलैटरल या पैन कार्ड की जरूरत नहीं है. बेसिक केवाईसी, आधार और वोटर कार्ड के बेसिस पे तुम 5,000 तक का लोन ले सकते हो.
अच्छा, और क्या क्या होता है इसमें?
उसमें एक और नया फीचर है कि तुम 4-5 लोग मिलकर एक एसोसिएशन बना सकते हो और उस एसोसिएशन को 5,000 से ज़्यादा तक का लोन भी मिल जाएगा. बस एक चीज़ है कि सामान बेचते वक्त जो भी पेमेंट लोगे उसके लिए तुमको बजाज फिनसर्व का QR कोड यूज़ करना है।
ये तो बहुत सही है, मैं भी इस पे अप्लाई करता हूँ। अधूरे वादों को पूरा करें, अपना बजाज सबका बजाज।
Wasn't that captivating? Our team scripted and created this small video as an example of the social media campaigns we suggest Bajaj can get into as part of their marketing and promotions to gain customer traction by playing on the pathos or emotions of the people whom we are targeting for community lending. Now, let's move ahead. So we have tried to cover customer acquisition, including merchant acquisition in our marketing strategies. And our marketing strategies are divided into two parts. In the first part, we'll cover marketing strategies for existing customer, followed by marketing strategies for the new customers. So to talk about the marketing strategies for existing customer traction, we have categorized this into two parts, creating brand equity and addition of the gamification element. In the first category, we are suggesting that Bajaj should undertake social media campaigns on Instagram, Facebook, Twitter, and other social media platforms to increase the visibility of the app. Also, some LinkedIn posts, especially targeted towards the service class, would serve the purpose of attracting the eyeball of our main target group. Personalized email or SMS marketing with daily offers to increase the awareness and consideration. Personalized emails deliver 6 times higher transaction rates as researched by experience, and that is why we have included this. And besides that, we all know that students are our future. We have come up with the idea to target the college going students by approaching the mess contractors to take payments from the students via Bajaj QR code and UPI. And why would they do that? For that, we are incentivizing them by giving commissions on payments and receipt in college canteen and mess. Now, coming to the gamification part. In this, we are suggesting the introduction of scratch cards. Now, if we benchmark the industry and we see applications like Google Pay, Phone Pay, Cred, they have all incorporated scratch cards in some or the other way possible. So we believe that it will be a good move by Bajaj. Next will be cashback offers and discount coupons. And for that, we suggest that Bajaj can onboard new merchants and take discount and introduce discount coupons that will be valuable for the users. And in the last category, we suggest to introduce some target spending challenges. As we all know that Holi is around the corner, so a challenge can be introduced on Holi to increase the engagement. Now, next up, we have marketing strategies for new customers. And in this, our team is mainly suggesting 4 strategies. The most important being referrals and promotions. As we have seen in the past, a payment app gets viral when it offers a referral bonus to the users. To benchmark, we have Google Pay and Cred. Then incorporation of referral codes and wallet amounts in Bajaj electronics or FMCG products can be done. As you can see, we have created a visual also on the screen. In the new merchant onboarding, we have come up with the unique idea of onboarding merchants in tier 1, tier 2, and tier 3 cities. And this is a part of our merchant acquiring stack. So in this, what is the idea? Playing on the consumer psychology, we have come up with the idea of this personalized QR code for merchants. And as you can see on the screen also, we have created a visual of the same, where we'll create this board to let the customers market themselves along with the marketing of Bajaj. As you can see in the slide, we have this individual who is standing with his product, which is the mobile phone. So this will grab attention, and also this will help us to make merchants switch from other applications to Bajaj Finserv Pay. We believe this is cost effective also, since we are already printing QR code for merchants, and this is just a small customization in the same. Now, coming to the third strategy, we all know that influencer marketing is in trend nowadays. So playing on the trend, even we have incorporated a strategy where we have identified some influencers like Dhruv Rathi, Track and Tech, Variku, and we have identified a package for them, which is 5 YouTube videos plus 5 Instagram posts plus 1 Instagram reel by each influencer. And we believe that this will help us to gain visibility. Also, what these influencers can do, they can link the app link of our app link for the referral link in their video promotions, so that we can get more downloads from there. Now, coming to the last, which is guerrilla marketing. So guerrilla marketing is the unconventional marketing. And for that, we are suggesting that Bajaj can jump into this, so that people we create an awareness about Bajaj Finserv Pay. So these are some examples of guerrilla marketing on this slide. Now coming to social media campaigns. So on this screen, we have created some social media campaigns so that we can play on the pathos or the emotions of the customers. So as you can see, we have created some social media campaigns for community lending as well. And we have come up with the tagline, अधूरे वादों को पूरा करे आपका अपना बजाज फिनसर्व, with the hashtag पूरे होते वादे. And we believe this will increase trust in the customers, and this will help us gain more customer traction. Also, what we have identified is we can launch some video advertisement challenges on Facebook, YouTube, Instagram, and D2C for students as well as professionals, so that we can utilize those ideas in our marketing campaigns. Now, next up, we have created two more advertisements for the shared financing and cross-selling strategies, which we have proposed previously. So in the shared financing, we have come up with a tagline, want to split and track your bills like a pro? Don't worry, we have got you covered. So we are doing this just to attract those eyeballs and gain more customer traction. So now Akshay will take over.
So we have tried to showcase the timeline of the overall plan, starting from the initial phases to the overall plan taking up in the span of 6 months. And that's how now we focus more on the financial feasibility of the product. Moving to the next slide. So moving on to the financial feasibility, although in the first year, the plan will be in a pilot scale, still we have estimated an additional gross revenue of 37 crore, which we have expected to increase year on year by tentatively 150% to 1,600 crore by the end of FY 26-27. Coming on to the bifurcation of sales, we have categorized our revenue into 5 segments, which are revenue from foreign exchange services, revenue from bill payments, revenue from cross-selling the products like insurance with merchant sales, subscription fees from shared financing, and interest revenue from community lending. The current active market share of Bajaj Finserv is 0.5%, which we have expected to increase by 5% by the end of year 5. While calculating such revenue, the revenue from bill payments have been projected at around 150 to 200 per customer and will increase by 25% year on year. The service fee on subscription basis for shared financing have been estimated between 100 to 150 based on the type of services taken by the users. And for the community lending, the market share is projected to be 5% of the overall user base of the Bajaj Pay. Moving on to the next slide, the profit is estimated to be approx 3 crore for the first year, growing at a CAGR of 312%, reaching to tentatively 1,000 crores by the end of year 5. The major expenses which have been taken on account are discounts offered and on bill payments and cross-selling on account of the professional campaigns undertaken. This will help us to increase the user base and repeat sales. Apart from this, the major expenses include interest on lending for community financing, leaderboard rewards, and other referral rewards. And that's how we would like to conclude our plan, that the overall plan is practically feasible and we are ready to adopt for Bajaj Pay growth. Thank you. We are open to questions.
Team, you'll have to stop sharing the screen.
Vaibhav, can I ask a question?
Yes, sir.
Yes, sir. Please go ahead.
Yeah. I saw the financials. Where did you take some input numbers on financials from?
So talking about the financials, we have made a complete financial model based on what the market is going on. We have tried to cover the phone pay model, the Google Pay model, and accordingly we came up with the estimated numbers, and accordingly the overall financial numbers have come.
Got it. All of them are profitable in year 1?
No, sir. I would totally say that they are not profitable in year 1. That's why we have come up with an implementation plan whereby the entire expenditure won't be done in the year 1. We are going in the pilot scale model whereby as and when we will be acquiring the users, we will be increasing the expenditure more to engage more customers.
Okay. Expected to be 5% market share. Do you
Yes,
think
sir.
5% market share player, it can be, but do you think 5% market share player can be so profitable? when incumbents with the rest 95% are still not making money?
So to say that, although we can say that the overall market, the major problem with Google Pay or the rest of the competitors were that they have done a lot of marketing expenditure in the year 1 or year 2 itself, and that's why they are not able to cover up the profitability. That's what we have taken. We have taken care of those things under consideration. That's why we think that we would be profitable by year 5.
All right. I don't have more questions.
Thank you so much, Devang. So, any other questions, sir? Yes, Tapan, sir.
I really like all the thinking. I think they put in many ideas together in trying to get in, and every idea possible they put in that. That was something that was clearly visible. So that's good. On peer-to-peer lending, what has been your research on? Do you think it works? It will work?
So we have consolidated like community lending. So we can take example of Grameen Bank of Bangladesh. So they have tried to provide loans to the community, and as a group, they even tried to provide the loans in the local societies to women also. So they have, so this was the successful model in the Bangladesh itself. So it's kind of similar to that, not exactly same, but yeah, we try to replicate that and to scale them up in India as well.
So any learning you had from P2P lending in China, which was actually very big then? Did you study that? That community lending is different from what you're talking about. No, the way that was set was very different. So on a mobile app, can you set up a community like that? I was surprised, like the way that was set up in Bangladesh. But it's a good thought. But I think more thinking on peer, because that would be one of your key features in the app, which would really shoot it to the next level if you get that right. So I somehow did not feel that you really went through in a lot of depths to understand that very well. The thinking was good there. But on the marketing also, I think you put in all thoughts that is possible in marketing together. Chavo, influencer, ho, jo bhi that gorilla, we put it all together. So the good part was, I think you guys really a bunch of young bright kids trying to put everything together. But in life, as you move ahead, be very focused. Pick up the top 1 or 2 things which will make a huge difference. That I think is just one of my small 2 cents to all of you. It's good to put all things together, but then you have to figure out just 2 or 3 things will really make it very, very big, and exponential. That is what's going to make a difference. But thank you for the presentation. I enjoyed it.
Sir, I want to add something to that.
Yeah, please.
Actually, sir, in the marketing strategy, we do not want to implement everything at a specific point of time. We want to implement it in phases. Like for the influencer marketing, we will start with that. And the marketing campaigns that we are telling about and the marketing competitions that we are telling about, we will implement them in phases. Like the Holi competition, we can start with that. Then after that, some of the campaigns that we are trying to get for the specific app or specific feature, we can implement it in phases. Like if you're implementing one feature at a time, like in 6 months, we can implement that. And then after that, we have some hashtags for community lending. So if we start onboarding merchants and something like that, then another 6 to 8 months, we can start on these kind of hashtags. And as far as billboards are concerned, we have to look at our marketing expenses. So we have to control that, and probably we will expand the reach. On the basis of that, we will implement that. So that was
you answered Devang's question by saying that others have spent too much on marketing to get the reach.
Right,
and that's
right,
why they not make money. And then in your presentation, you were all over the marketing part of it. That's why I made that comment. So
just to add,
even influencer marketing also, a lot of research has to be done, the effectiveness. I've seen people like like top stars. They try to endorse a brand and less money spent, like 1 or 2 endorsements. In the comments below, if you study, it's on some political issue, something nothing to do with the brand they're trying to endorse or trying to put that. So that really goes for a lot of waste of money. So I leave it here. I don't want to get into micro discussion. I thought just give you my overall view. And since you answered that question to Devang on marketing spend, that's why I thought I'd bring in that perspective, because that was something you said was a downfall for the existing players in terms of profitability, and you will be cautious on that. At the same time, when I look at the presentation, you're also all over on that place also, and trying to put it together. But it's perfectly fine. I'm not undermining your hard work. As I said, I loved it. You put everything together. But when you go forward and start a career, remember to pick up the top 2 or 3 things, which will make a huge difference, and get that into very high exponential stage. That would make a huge difference. Thank you.
I have a question for the team. you have obviously set very strong targets in terms of what is the customer acquisition that you want to have for the Bajaj Pay wallet, and 5% of the users is obviously a large number. Have you tried to understand what would be the number of customers that you would have to acquire, and what would be of those new to Bajaj versus existing customers, and what is the cost of acquisition for each?
To take that question, so right now the Bajaj Pay has 10 million plus downloads, which we have seen on the Play Store. So based on those transactions, and we have covered. So what we have done, the people who are actually using the overall app, like those who are actually using the UPI apps, so we have taken an incremental rate of 10% year on year, and accordingly we have covered the overall market for Bajaj Pay for the next 5 years. And that's how we have taken the 5% of the, so whatever transactions we are taking, we are saying that the new customers which will be coming, that would be the overall 5%, because right now the current market share is really less. We are just 0.5% of the overall market. So these things we have considered. And talking about the cost basis also, all the cost which we are considering, we have taken all those marketing campaigns and ideas which are actually cost effective. So we are not coming up with any big banners. We are like, if we are going for influential marketing, so that is what we can say, a very cheap kind of marketing as compared to bringing up a big banner for any big celebrity under board. So we have considered the cost part also.
So what would be your weighted average cost of acquisition for a new to Bajaj customer?
So we cannot come up with an exact number for sure, but looking at the overall calculations under consideration, we have seen that 100 to 150 rupees would be spent per customer to acquire, but in the span of 5 years. But that's what we have seen, that a per customer revenue generation in the coming 5 years would be more than 500 rupees. So that's how we have calculated the profitability.
Okay, thank you.
Tarun sir, Anup sir, any questions? Okay. I think we can then move on. Niranjan, over to you. Thank you so much, Team One.
Yeah. Malvika, how did you like the presentation? I think the part wherein they had the split bill and poke to pay feature was pretty nice. Next time we go to a restaurant, we don't have to look at each other's face, and we can just use that feature.
True. I think my favorite part was the personalized QR code that they spoke about. I think that was very interesting. Something that I haven't heard before during our conversations. But kudos to you guys. Very, very interesting concepts, and best of luck.
Yeah, best of luck, guys. Are we ready to call upon? Yeah, are we ready to call upon the next team, Team Baazigar, Rishabh and Ragini?
Welcome, Team Baazigar, and best of luck.
Rishabh's mic is not working, so can you please wait for 1 minute?
Sure.
No worries.
Yeah. Am I audible? Hello.
Yes, you are, Rishabh.
Yeah, we'll start away. So greetings to everyone present here. Team Baazigar is here to take you through our presentation. Starting off with the executive summary, we see industry is on the verge of getting completely digitized, with disruptors knocking on the door of incumbents, and a significant evolution in customer expectations. In our research, transparency, complexity, and lengthy process turned out to be the 3 critical issues with buying insurance online. The 4 most important elements considered by customers were cost, quality, simplicity, and speed.
Our idea is to position Baazigar in a rebranded form as Crystal, insurance made with love, which delivers on all element of customer expectations. It involves 3 steps. First is resonate, then communicate, and the last one is to affiliate. The cost in the first year will be close to 13 CR and will lead to 4 million policies being sold in FY25. To conclude, we believe customized and simple offerings will be the key. And for this, we need data. So the company which will be able to generate that data will be the market leader. The most significant thing we have seen in insurance industry is that it hasn't changed. Globally, it is largely dominated by insurance companies which have an average age of 125 years. But if we see in the past 5 years, the disruptors' market share has been increasing at a 64% CAGR. Although their market share accounts for 2.38% currently, this is still a very formidable growth rate. In the competitive landscape, we used price and speed as the parameters, with the size of logo indicating the market share. Echo turned out to be the fastest, followed by Baazigar, and IFCO was the slowest. Echo was also the cheapest, followed by ICICI Lombard. Looking at the digital matrix, Baazigar, an industry incumbent, is in the stage of collision at the core, that is redefining its own practices. Google, Amazon, and Lemonade are poised to reinvent the industry itself. So for our primary research, we played the word association game with word insurance and got some pretty surprising answers. People say multiple things. They say it's a ripoff. I'm not really trusting them. It's overwhelming. It's daunting. Anyone going as far as saying that it's a scam. But if you look at insurance as a product, it is a pool of people coming together to hedge one of them against a potential mishappening. That is a textbook definition of charity. But then why is it perceived the way that it is? Well, we tried figuring it out, and we believe all this is happening because first, customers don't trust their insurance company. Second, they find it difficult to understand the insurance product. And third, which is one of the most critical aspects, is that insurance buying experience is still very confusing, be it online or offline. People want to buy it online, but face multiple issues. The 5 most important elements considered by customers while buying insurance online were cost, quality, simplicity, time, and a hassle-free experience. If you match these 5 elements with Baazigar, we really stand out in terms of our product quality. We have excellent claim settlement process, but that too is known by a very smaller number of people, not leading to a major competitive advantage. Coming to the other 4 elements, we are still lagging behind and need to focus on them.
Now, what will success look like? A simple strategy of being devoutly customer-centric will define success. Now, that may sound right, but in insurance, that is a formidable task. The very business model of insurance is seen as pitting insurers against their customers. But if we modernize this business model and get to delighting customers, that can fuel rapid growth. Growth is valuable for us as it generates huge amount of highly predictive data. And at its core, insurance is about monetizing probability theory. And so sustained advantage at data means a sustained advantage at pricing and underwriting risk. And that's the very heart of insurance. These data sets can allow us to refine our offerings and make products and services more personalized to the delight of our customers, and so the loop closes. Lastly, a number of KPIs can aid us to track how we are performing in these 4 areas. Bounce rate, conversion rate, customer acquisition cost, etc. will be the defining matrix according to us. Now let's take a look at the current journey of a customer buying insurance. It starts from an urge to hedge against a potential risk or comply with regulations. The customer starts looking for ways to buy insurance, which starts with conducting a preliminary internet search. Due to information overload and complexity, the customer chooses the insurer through word of mouth or the top link that appears on the search. They follow similar process in selecting the product and start with paying premiums. If at all the claim event occurs, they file for claim and wait for it to get approved. They share the feedback with family and friends, irrespective of the positive or negative experience. In this entire process, they have some unmet expectations which pertain to insurance being sold as a commodity. There is little to no differentiation between the insurers, and the products are too complex to understand without help. The websites are dull, not engaging, and there is reluctance to share personal information. The interactions between customers and insurers are as high as twice a year. The claim settlement process is also intransparent, providing little satisfaction even when claim is received. So we carried out a psychographic segmentation to group customers, and the first profile that emerged was of the explorers, aka Rancho from 3 Idiots. They are tech savvy and value simplicity highly. They will be more than willing to buy insurance online and are attracted to companies which offer smooth experience and easy to understand products. The second category is of skeptics captured by Raju. Their risk appetite is low, and they largely remain frustrated and unhappy with current offerings. Still, they would hesitate buying insurance online till they get surety about the authenticity and quality of the same. The third group is a virus, the conventionalist. Virus is a very stubborn person who won't change his views until a tragedy strikes. He won't buy insurance online yet. These people haven't embraced technology, and their views are shaped by how an insurance company responds at the time of claim. The last group is of the rationalists, represented by Farhan. Farhan is content with what he has. He will listen to others' recommendation and conduct his own diligence. He will be channel agnostic and switch insurers if he receives something extra. Now, coming to a proposed idea. Although traditional companies like Bajaj have modernized their operations, but the first thing that comes to consumers' mind when asked about incumbents is complex products, lack of trust, time-consuming process, and poor customer service. Hence, they are willing to try new entrants, which look promising on delivering better experience through personalized offerings. To bridge this gap, we suggest rebranding, replacing Bajaj with Crystal by Bajaj Allianz, insurance made with love. This will be a unique, simplified, and a highly customer-centric platform. The idea is to position insurance as a valuable and transparent product, just like Crystal. Now, in order to differentiate Crystal from commodity insurance, we suggest a three-step approach of Resonate to match the platform, product, and services with customer expectations, Communicate to convey all the values created in the first step, and Affiliate to increase customer touchpoints by creating an ecosystem of partnerships and building a community around it. To Resonate will be today's expectations, to Communicate will be today's differentiators, and to Affiliate will be tomorrow's differentiator. Under Resonate, there are three parts: products, processes, and services. While we are doing well in products and have excellent claim settlement process, we need to focus on processes and services, as without these two, even a good product won't convert into sale. Starting off with the processes, we plan to make online purchase simple and easy by revamping the website, since website is the first point of interaction with a company in an online setting. Firstly, we focus on aesthetics. The current combination of blue and orange is too dark and unappealing. The use of soothing colors on white background is proven to have a sensory appeal and increase engagement. Secondly, the homepage is overloaded with information, due to which even a product like Prime Rider is easily missed. It should instead have a story to tell in order to provide a hook and grab customer attention. To know about the product, the customers have to click on the Insure tab instead of the icons, which is not very intuitive. Instead, the journey can be more streamlined to reduce to's and fro's. Secondly, there should be an assurance of no call so that people can serve the website freely. There can be an option of account creation, which can save time and reduce anxiety by avoiding collection of redundant information such as name, age, and phone number. Lastly, the products are too complex to understand. There are 11,315 words under the health insurance tab, while the average attention span of humans is just 8 seconds. The product comparison option can make products easy to understand by bringing out the subtle differences between them. Coming on to the personal touch, no USPs or values are communicated to catch customer attention. There are too many questions while purchasing policy. To avoid this, information can be sought in a more conversational manner instead of giving the feel of filling an online form. Transparency is another major concern which needs to be addressed. Sharing information through notification updates like premium breakup in fees and cover, claim settlement stage can make the entire process even more transparent.
Now, we analyzed how our competitors are performing on these pain points by rating them on a scale of 1 to 10. Ironically, all these points are getting addressed by one or the other player, which can be seen through the high rating in that category. Like Acco has a rating of 7 in information clutter, which tells that there is no overload on homepage, but there is no clear firm which is addressing all of these points as standalone. So an ideal website which delights the customer can very well be created, and all these ideas are pretty much implementable. Now, here on the left side, we see websites which have same layout, be it Bajaj, ICICI Lombard, or GoDigit. Even their taglines have similar meanings, which gives a feeling of redundant offerings. And this is exactly what we meant when we said insurance is being commoditized. Now, if you see the website on the right, we can see how different and aesthetically pleasing it is. So now making the customer feel valued through various services is very crucial in order to delight them. We have discussed a few examples here. Now imagine if you have bought an auto insurance and you get a priority queue or a quick front glass wash at a petrol pump, or if you have bought a travel insurance and your name gets called and you get a priority check-in. This is how we can delight customers without waiting for them to go through a mishappening and processing a claim. Speaking of challenges, first one is to retain the functionality of the platform amidst all the changes. Second one is ensuring data migration without losing anything. And the third one is to have a unique selling proposition. The milestone will be an improved NPS. Now, once we have improved the platforms, we need to communicate to the end customers in a refreshing way. Like we have an amazing claim settlement process, but the awareness around the same is very low. So we need a marketing campaign that can change the way insurance is perceived. Let us see a sample ad that we have created. It tells why customers need insurance and how Crystal fulfills them by turning all the legacy failings of insurance into advantages. This ad is built around the aesthetics of the website, signifying how simple and easy it is to book insurance. Let's look at another video which can be streamed on social media handles. So long videos do not work here, hence it's small. It does not sell insurance directly, but gives a subtle message that we are there for you in case a mishappening occurs. Similar videos can be built around each value proposition. Newspaper, magazines, and print media in local languages can be used extensively as they cater to a different customer segment altogether, especially the conventionalists. Apart from the above three channels, the SEO also needs to be used extensively as it is one of the most crucial sources to get online traffic on the website. The keywords around ease, affordable, fast, and community needs to be secure. Now, we sell 5,000 rupees policy, 20,000 rupees policy, and we even sell some 60,000 rupees policies. And the median age of the first group is 25 years, the next is about 35 years, and last is around 55 years. Our strategy is to acquire customers at a time when they haven't gone to any other insurance company, when they are young and their needs are modest. We delight them at that stage only, and then as they go through their life cycle events, their need for insurance grow. We hope to be there to grow with them by providing them the products that they need. Customers under the age of 30 will typically buy an inexpensive policy with us, often for as little as rupees 5,000 a year, such as bike or a health insurance. Then when he gets a car in a family, he buys a car and a family health insurance, and the loop continues. All this is just naturally recurring, highly predictable life cycle events. And so by focusing on this age group, we get a high customer lifetime value and growth, all with zero additional customer acquisition cost. Now, the first challenge is to reach an optimized level of budget, which minimizes the customer acquisition cost. Second is creating unique but informative ads. Third is to make the plan flexible enough that it covers multiple scenarios. This stage will cost around 7.3 crore, leading to a reach of 21 million in the year one. Time period will be 9 months in the first year, and from the next years, it will be full-fledged. Milestone will be adding 3 million customers by FY25 and reducing the bounce rate to 35%. The last step is affiliate. That is to increase the touch point with customers. Under this, we suggest building an ecosystem and offering community services, keeping customers at the center of business. Under ecosystem, the idea is to work on a shared value model, under which the main focus will be on ensuring safety and well-being of clients and earning increased profits as a byproduct of lowering the probability of claims. This will challenge the historical model of insurance companies benefiting by not paying claims. In order to achieve this, we will have to enter into partnership with various companies. Under community building, we tend to build a community of knowns for people so that they can share their progress and experience among themselves. This will be grouped under 3 broad heads, first of which is activity. This section will trigger participation in tasks and provide motivation to complete them diligently, like challenges received from networks, upcoming events in the area, etc. Second section will be of connections, where one can track on the activity of their connections and what all they are doing on this platform. The last section will be for reviews, where the connections will be able to share their reviews of product, processes, and tasks. So this is a working model of how the community will be kept engaged. The system will work in a way such that regular tasks will be given to customers, like completing a mini marathon of 5 km. Points will be rewarded upon successful completion, which will be redeemable at various platforms. This will push customer deeper into the ecosystem and increase loyalty. The rewards will keep increasing as the customer progresses from one task to another, and so will the data points. This will only give us deeper insights in their lifestyle and encouraging them to generate more data.
Now we spoke about targeting customers early and how it can lead to exponential growth. But how do we ensure it happens? Now let's say Raju buys a bike insurance with us and gets a free or discounted service from Go Mechanic. When he uses that service, we in turn get the data which can help understand his driving behavior in general and puts us in a position to not only give him better priced and customized bike insurance for the upcoming years, but the same can be translated in car insurance as well. We can see an example here of the data that can be fetched from a sample service sheet. The insights such as how frequent a clutch plate is replaced can be helpful in defining overall driving behavior. The same cycle can be followed for health also. And as the customer stays on a platform, we get more data points from this community and the ecosystem that gives us a sustained competitive advantage. If you look at the customer psychology, majority of them feel this is a win-win setup and are okay with it. And from financial aspect, the cost of providing add-ons to the customer can be covered with the savings in acquisition cost. Now, this stage will be expected to increase customer retention to 2x in 2 years for online platforms. The main challenges will be continuous reinvention of ways to engage customers to keep the community active, forging new partnerships in order to provide redeemable coupons, and lastly, ensuring data privacy. Implementation of this step will cost around 6 CR in first year. Coming to financials, a total investment of 13 CR will be required in year 1, which will reduce over the coming years. The total reach will be 21 million in first year. At a conversion rate of 1%, we will have 0.21 million new customers, which will increase to 5.41 million in FY26. This increased customer base will compute a CAGR of 108%. We have calculated the return in terms of premium earned per rupee spent on marketing, which comes down to 189 rupees in FY26. In the sensitivity analysis, shock of 2% is given to the conversion rate and a shock of 20% is given to the cost. The best scenario comes out at 264 rupees and the worst comes out at 80 rupees, which is better than ICICI Lombard's 72 rupees. Now, remember the success scenario that we referred to a little while ago, which is to put the customer at the center, build a technology stack that is customer-centric, a business model that is customer-centric, and a user experience that is all about the customer. Not the policy, not the broker, not the regulator, but the customer. And the steps we discussed help us achieving it. We delighted the customer by resonating with them. We achieved rapid growth by communicating effectively with them. And we made insurance personalized by affiliating with them. And in these 3 steps, we created 3 most important value propositions. That is simple, refreshing, and personalized. And to conclude, we would just say that while all this looks very challenging, this is how insurance will look in the future. And so if not us, then who? And if not now, then when? Thank you. We're open for questions now.
Ragini and Rishabh, I would please request you to raise your hand so that your videos are visible.
So hi guys, let me just start by some comments and maybe a suggestion or question. A very good presentation, quite holistic. Different branding is an interesting approach. I was wondering, when you put this strategy together, you seem to have taken all GI products on the same platform in terms of your thought process. While not every product, I believe, unless you think differently, is prone to being bought or sold online, offline. So did you A, think about that? And B, maybe after this question, if you would like to add that in your thought process, and maybe look at travel maybe or health online and not, let's say, something else, how would you want to reconsider your strategy?
So, sir, our main idea was that to make insurance so simple that even the product products that we think cannot be sold online, they are so easy and simple to navigate that they can be bought online. So,
and the idea was to onboard the customer not with the complex products but simple products, and when they get incentivized to buy the other products which might be complicated as of now to be bought online, they would be more than willing to do it. And so taking the advantage of that network effect, that people coming on the platform and then staying over there and doing everything, even it might be a bit difficult for them, but then them staying there over there and buying it.
So what you're saying in a way is that maybe if it is a high involvement product category, within that you would slice and dice this by taking the simpler elements of those products, simpler products, let's say health, amongst them, and then push that.
Yeah, exactly.
Is that what you're saying?
Yes, exactly. Slicing and dicing.
Okay. But do you think people's queries, etc., are easily answered through simple product?
They might not be, but that customer will always be intrigued to ask questions and know more about the more about the product, and that will be across all the platforms and on all the insurance companies. But us getting that priority, first priority over the others, and getting the chance to clear all their doubts, firstly will lead to higher conversion rate, and that is what our main idea is.
So, sir, also we think that if customers feel that the product is simple, they will try surfing it online once before going to the agent directly, which happens right now. So that is why we are making the platform simple, so that customers are induced to go and see our website and not approach agent in the first place. They can come at a later stage, but not at the initiation, not at the motivation stage.
Okay. I'm taking them the answers. I'm not rebutting you or anything, but my suggestion would have been a little different, to maybe look at categories which are simple by themselves. Querying of customer of easy products also is never easy necessarily. Maybe you could have considered some kind of a smart chatbot. I didn't see much of that, which was self-learning. Maybe it could have been some kind of a call center as a second level, but as a support, I didn't see that. So some suggestions there. One other question, if I can add, see, Baazigar is a pretty strong existing business already, and you have agents, you have banks, and a pretty wide distribution network. So how would you have, created a situation while this remains unique? You don't cut the branch that you're sitting on. You don't land up, messing up with your existing agent network, because you can't lose that, right? So would you then want to consider Crystal as something that goes offline and online as well, or at least the offerings of this will be available offline as well?
So our inference is to make it an online brand so that we don't cannibalize our offline sales. So being, it more of a platform which provides insurance in a simple way, not cannibalizing our offline sales. That pretty much stays as the way it is.
Okay, so we'll just stop here. Fair enough. Thank you.
I have a question, quick one. Why do digital sourcing? What does digital solve for? And within that solution, how would Bajaj Allianz General get successful?
So I think it is
it
very well
fashionable to go digital? Everybody is doing it. Let's do it. It's a buzzword.
So it's not because everyone is doing it. It's more about doing what customer wants and what makes easier, what make customers' life easier. And this is what we communicated in our last slides: the value proposition, making things simple, proposing insurance in a refreshing way, and making products which are personalized. And to do that, online is the only way to go. We cannot be offline and build that kind of a network and achieve all those things. We believe not at all. It's very difficult to implement. It will be difficult for it to make financial sense also. So,
and also we believe that customer expectations are evolving. So the services that we didn't think will become online, they are becoming online now. So customer expectations have increased drastically. And if we don't go online, there are other players who would. So companies like ACO, they are already entering. So if we don't go online, we will put our existing market in threat. we might, so we have an upward pressure from companies like ICICI Lombard and Bharti AXA. They have combined to get a market share of 11%. And we have a downward threat from companies like Acco and Digit Insurance, which are going online and capturing our market. So if we don't go, we risk losing our market share.
So downward pressure is basically 3.5% of market share, and upward is basically more than 11%. So we are currently lying in the middle, both of them coming after us. So we feel it's need of the hour.
And why do you think they will be successful? Bajaj Allianz General will be successful in online marketing. As you are making presentation, somebody else is making presentation in ICICI Lombard.
So that is what we said in our conclusion. If not us, then who? If not now, then when? So it's, if we do it before and if we do it well, we have the brand to capture that market at first and create network effect and gain the customer.
Plus, we have differentiated ourselves by proposing an idea of ecosystem and community building, which is not existing with any of the players right now. So this can be a differentiating factor.
Okay. See, online is a great way to democratize information, but you should have some information. And we are very proud our general insurance company is best in claim payments. So if that is the case, that should be leveraged. That's what we will, that's the reason we'll be successful. You are getting the point, right?
So can I add to it?
Yeah.
So first, when we analyzed the problems, we felt that claim settlement is a very big problem. But then when we analyzed a company, we found out that we are the best at it. And it's a problem that we have already solved in a very good way, at least better than our competitors. So why not look at the other avenues? So that's what we meant when we said we have to resonate with the processes and services. Our products are doing well. So we can have shifts on the other things. That is what
I would harp on what is my strength, because that's what differentiates me. And internet allows democratizing of that information. When you went for research, you came to know that Baazigar is number one, right, in claim servicing. Yeah. But probably people don't know. But good effort. Yeah, Tapan will have the last question.
Yes, thank you. No question. First and foremost, thank you, Rishabh and Rajni, for the feedback on the website. I really value it a lot. But I'll just ask you some questions, some data points. So do you think a bit more? First and foremost, Acco is about 6 years or 7 years old. How many years old?
6 and 6 or 7. 2015.
About 7 years old. Yeah. Bajaj Allianz is 20 years old. So Acco would be like now close to 1/3 of Bajaj Allianz lifespan. And fully digital is what you said. What is their business performance in terms of their combined ratio in 7 years? Like, how much money do they make? As an investor, like how long will I say invested?
No, we didn't analyze their financials completely. We went for market share and their growth.
Yeah, it is a 200% combined ratio, which means every 100 rupees they take, they lose 100 rupees for 7 years. And this is like the latest one. They have been losing much more than this. Okay. What percent of the business actually comes online? What from partnerships?
No, again, we didn't go into that.
No, Digit is a name you heard, Digit. So you thought it's digital. What percentage of Digit comes online and what percentage comes from offline for Digit?
So Digit is majorly offline. We said in the terms of processes, disruption that they are causing, not in terms of online.
So there's no disruption, actually. The 98%, 99% is offline from agents. Yeah. And that's true, not regulated agents, purchased agents. So if you look at the data, the number of agents they have is very low. Yeah. So it's just purchase business.
1,700 points down.
Okay, thank you. That's a good information, but out of context here. So coming to the point there. So I don't think that even they are doing something new. The name is new, but the business is purchase business from offline agents. Acco, their business again, let's say a partnership with Bajaj BFSD, their partnership with Bajaj Finance. So if it was so successful online, why they would be entering partnership for business? They should be just minting money, So they have a loss ratio which is the highest in the industry, a combined ratio of 200%. So do you think that just by following Acco, and my market share in my worst time is 60% of the industry's market share. Just to give you an idea, in the worst time. Look at all my quarters. In my worst quarter, I had 60% industry's profit as my market share of profit. Now, the number of customers that we acquire in a year is the maximum, even Lombard, and nobody comes close to that. We have 12 crore customers, and 1 in every 3 Indians have our policy already. Okay, now that was one point I just left you, because that is the part which I felt was missing. While you did compare the good part, you looked at balance sheets and think, why is that Brazilians will not do that? You know, if this is going to make so much sense, business sense. Lemonade Alliance has a share in that, 13%. So it's one of our companies in which we invested. It did not turn out to be a very good investment for us. Okay. Now let's come to the point of, I heard this many times, simple, easy, straight through will make it sell. No? And insurance is complicated. I've heard this many times. So I also was very convinced. I thought that may be the way process. And when COVID happened, there was a product which insurance companies took out. Everybody had to take out. There's regulatory mandated, and every company had to have it on their website. It was a COVID product. So it was like 2-step purchase, no underwriting. The simplest product you could think of. Kuch nahi, koi underwriting nahi tha. You just enter, buy the COVID product, very cheap. Like it was costing about 400 rupees for a year. And like you would get about 2 lakh rupees if you got COVID. High risk, high awareness. Awareness was like very high. Everybody could get COVID. Huh? I'm talking before the second wave. Huh? And then second wave hit. At that time, this product was on all websites of all insurance companies. 2-step purchase, no underwriting. Naam likhiye, click kariye, buy it. 2 lakh sum insured, 400 rupees premium for the whole year. Very cheap, no? That is not even 1 rupee, close to 1 rupee a day kind of. Probability of getting COVID, anywhere. Yeah. Simple, easy to understand, clear. And amazingly price point and high awareness level. So now if I look at the Indian population, 130, out of which I think somewhere around 40 is covered by government, which is below poverty line, and the lower middle class by the government scheme. About 18-20 covered by insurance companies. So we are talking of close to 70 odd crores of Indians who can afford this 400 rupees and who are tech savvy and online. What do you think should have happened for insurance companies? Because they fulfilled all the demands that you said. Easy to understand, simple, easy to buy, high value for money, very cheap, high probability. What do you think should have happened for the insurance company's website? And 70 crores Indians don't have it, and they can afford it, and they're tech savvy, and they're on smartphones, and they use Amazon, and they use Flipkart. What should happen to insurance company's website, as per you?
I think the main issue is the underestimation of risk in the customer's mind. They kind of believe that they won't be affected with this.
Exactly. Now park it there. Your entire presentation becomes a sham the moment you say this.
Yeah. So
then digital is not required.
So the problem that we were solving is that we have really good amount of traffic on our website. It's just the conversion rate is 1%. Addressing the problem of underestimation of risk is a different challenge, and converting the customer who has come to our platform. And
that's why I think if you look at what Tarun and Devang mentioned, they're trying to lure you to it as that understanding of the point. And that's what Devang mentioned, that why should Bajaj Allianz do what maybe an ACO is doing. Maybe your digital is claiming to do, but is not doing at all. It is just by putting the name and creating confusion in the market. And your click to insure is an old concept by an insurance company. So what a 6 years old concept by Western Insurance, and it also failed in terms of making money. The frauds on online is the highest. The more you simplify and make it straight through, the more you lose money. And the more you say that people's understanding of risk in their mind is very low, the more my investment on digital goes down. I invest more on distribution. Because at the end of the day, that is the bigger population, because 70 crores Indians did not buy COVID cover. Our website did not crash. And then I don't think I can simplify a product more than what COVID cover was. I don't think I create awareness more than what COVID time created that awareness. I don't think I can create a bigger pull, and even I spend like 100 crore on marketing, I don't think I'll reach that kind of status, which COVID created. And our servers do not crash. Hardly any sale online. It was still offline. So I think when you look at a problem statement, just try to put these caps also. Why? First, question, and that's my tip to you both. First question, always ask when something looks very stupid and simple. You should always ask, "Achha, hua kyun nahi pehle?" Then you'll get these ideas as to why this has not happened, and then your solution will be a bit different. I loved your ecosystem part. There, the issue again is, as per Insurance Act 1938, an insurance company cannot sell anything except insurance. So look at banking or NBFC. They sell insurance also. They sell mutual funds also, and they have third-party revenues. Have you seen an insurance company have a third-party revenue?
No.
Never. You can't have it. It's as per the Insurance Act. So I'm forced only to sell insurance. So I can't create an ecosystem also, which in a way allures the customer to understand that I'm creating an ecosystem. I have to file that product. And that's why we look at Devang, his team and my team, and we work together to file a product which has EBH as part of the product provisioning. I could not have sold EBH to my customers if I not filed that product and got approval from regulator. No freebies can be given to customer. There's a section for that also, for alluring the customer to buy insurance. So I can't give him discounts and voucher cards which he can use to buy insurance as per regulations. I can't do that. It's forbidden. So when I run a loyalty program, like you said, give vouchers, I can't do that. It has to be filed with regulator, and regulator will not allow that because there's a violation of section 41 of the Insurance Act again. So when you look at a business, always ask this question, ki kyun nahi ho raha? It looks so simple. Kyun nahi ho raha? If all research says simplification of insurance is the way forward, kyun nahi kar rahe log? And then you should start thinking. Having said that, I think now this is obviously a lot of insight which I gave you just for your learning process. So I would say that you did a very good presentation. Like if I was young and if I was at your place, and if I was making a presentation to insurance company CEO, I've done the same thing, exactly the same thing, nothing different. Yahi dikta, yahi karta, give a very good assessment on feedback, put it very beautifully, put all the points together, in terms of what should be done. And I don't think I would have done a better job than what you both have done. So amazing job done there. And I just give the input, just so that you have a learning as you go forward in life, that when things appear so simple and doable, the question you should ask is, kyun nahi hua? Is everybody so stupid or there's something behind it? If you can't answer the question, kyun nahi hua, then go and do it. They miss their opportunity, then you go and attack it. But first ask this question, because that will give you a lot of thought process, very different from the way you would normally be thinking, you'll be so excited about it, here, ye hona chahiye. And always look at profitability. Does it make money? Because that is the first step you should ask. But well done, guys. Really loved it. Thank you very much.
So can I just add one point?
Please do.
So, I mean, we never really said that we should be following into what Acco or GoDigit are doing. We want to stand out. We never looked into their business model that deep, but at no point we believe that we should be following them. We on our are a very better brand and are the most profitable. So it was just a clarification on
No. I don't get me wrong, kids. When I give you a statement, it's not that I challenge you. I don't do that at all. Because the amount of hard work you have done, I respect that. I started by thanking you for the feedback. I'm going to use it, and my poor head for IT is going to have a tough time after the presentation. The next time I do is send the presentation to him and say, "Acha, bata bhai, ye kyun hai?" So that is what will happen. So I'm going to use the presentation. It's very useful to me, and that's why I thank you for that from the bottom of my heart. My job also as a panelist is also to be a mentor to you, to make you think a bit differently. So my attempt is there. So don't try to think that I'm trying to criticize, judge, or get you into a corner. No, not at all. That's not my intention at all. So that's why I said I thank you very much for the feedback. It's going to be useful for me. So my IT head is going to solve that now. The next 3-4 hours he has to work on it to get back to me. So and the project actually came from him also. And I think Malik was there. And I saw a bit of their inputs also in your presentation. So wo sab dekha maine. So I can understand where the inputs are coming from. So when I give you this feedback, it is to all across. So don't get me wrong, Good job done, guys.
Thank you, sir.
Thank you.
Thank you.
Thank you so much to all the panelists. Guys, just thank you so much, Ragini and Rishabh. To just put things in perspective for both of you, when I joined Baazigar, I think I made a very, very similar presentation like both of you to Tapans and had the same very similar points. And trust me, it's okay. Insurance is a very, very complicated industry. And I think today you all have received very, very valuable feedback from our entire panel. And I hope to see you guys use that and actually, try and build upon that later on in your career. So best of luck to both of you. Shall we call
Shall
upon.
we call upon the third team then, Malvika?
Yes.
Yeah, so up next are Ganged Up Gryffindors. I'd like to invite Dakshita, Rajveer, Moin, and Sejal.
Yes, I think we have them all here.
Yeah.
Okay, best guys, please raise your hands so that your videos are visible in the front. Okay. So over to you guys. Best of luck.
Is our screen visible?
Yes, your screen is visible.
Yeah, it is.
Can we start now?
Yes, please go ahead.
All right. Hello, everyone. We are Team Ganged Up Gryffindors, and we are here to suggest a comprehensive plan on how Bajaj can onboard more millennials and Gen Z for their life insurance business. To deeply understand the problem statement and to appreciate the granularities, we started right off with primary research to understand the pain points which the millennials and the Gen Z face. We floated a survey to understand their purchase behavior around insurance, and we received around 714 responses from people in the age group of 20 to 41. However, to understand the problems further, we conducted personal and focus group interviews to understand the key pain points. Through the survey, we were able to gain some exciting insights, with 76% of the respondents citing confusion around policy specifics and the general need for insurance. An astounding 98% of the people felt that the entire process of application is extremely tedious and lengthy, and 63% of them found insurance to be expensive and not really a requirement at this juncture in their life. When asked what would make them likely to purchase an insurance, the top responses were better understanding of what's being offered, tax saving options, more personalized offerings tailored to their needs, and a quick and seamless process of application and purchase, and not to forget, address their concerns when it's time for settlement. One interesting insight that we got was that most of the interviewees preferred living benefits over death benefits, solidifying our claim and assumption that an average Indian millennial does not believe that they'll die anytime soon, and they also want to reap the benefits of the insurance in their lifetime. Now, to understand the need for millennials, it was important for us to also gauge into the life insurance trends in the country. India is currently the 10th largest life insurance market in the world, and by 2025, Indian insurance market is expected to be worth around $250 billion. India has a relatively young population, with 36% of the population comprising of millennials, which is one of the largest in the world. The current life insurance market has the capacity to get an additional $78 billion worth of premiums over this decade, where private life insurers can expect the new retail term premiums to double in the next 5 years. Currently, there are 24 life insurance players in the market, out of which private players have a share of 33.78%. The Indian life insurance industry has been growing at a CAGR of 5.3%, which is something that the private players can capitalize on. There is a total of 60 crore insurable population in the country, and currently 21.7 crore of the millennials are a part of the active workforce of the country, which shows the potential of this market in the current years. We were now able to highlight and summarize key pain points, and we would like to briefly describe their solution before going in depth in the further slides. The biggest highlight was the incessant requirement for life insurance products. The feeling of immortality, coupled with spend more, save none mentality, and thinking mutual fund is the only go-to instrument for tax savings and wealth creation. This, we believe, will be catered through our DigiPlus 1.0 strategy, where we reach out to the right audience through the right mediums on something that they love, social media and entertainment platforms. We plan to offer them specific tailored insurance based on benefits, payout, and their life goals. When we talk about multi-stage onboarding, we believe more the number of clicks, more are the opportunities you have to lose a customer, and more the weight, more are the chances the customers not going through with the onboarding. One interview specifically pointed out on how they thought about buying an insurance, but eventually did not go through with it because of the delay and constant to and fro conversation that was there. To address this, it is absolutely necessary to start on the journey of being an insurtech rather than a traditional insurance firm.
And lastly, some challenges that we personally encountered while testing the existing chatbots that are there on WhatsApp in most of the leading insurers was that the information overload for someone with too many drop-down options in the menu-based chatbot. We love the concept of educating the customer with a short and informative video that is there on the Bajaj Live chatbot. For someone who deeply understands the insurance market and their offering, this is a good way to reach them. However, that's not the case with most of the Indian millennials and Gen Z. So how do we address that? Something that is prevalent in the stock market industry. On the basis of preliminary information, they put through gamification and address their naturally typed queries through natural language processing. We can offer 3 to 4 product suites rather than 50 to 20 product offerings. Now, on the basis of the gathered information, we built a customer persona. Let's meet Sana, who's a 29-year-old corporate employee living and working in Gurgaon and has a high purchasing power. Sana seeks convenience, is tech savvy. She's also risk averse and looks for extensive information, reviews about products before purchases. Now, because of lack of financial awareness, traditional equity instruments and mutual funds are her go-to instrument to save taxes. She also doesn't believe that insurance is a priority as of now, and it might just be a financial burden for her. However, even if she does want an insurance, she wants the kind of products that are made with her needs in mind and don't burn a hole in her pocket. She expects a frictionless and transparent purchase process with easy and transparent claim settlement options and value-added services even after the purchase. But unfortunately, that's not what she gets. Instead, she finds traditional products and policies that her parents purchase, and she feels they're just not catering to her needs. She eventually ends up wondering if insurance is even worth the premiums being charged, and not to forget her doubts on settlement claims and how slow and painful it can be. And even if she does convince herself about everything else, the tedious process makes her procrastinate and eventually not take it up at all.
So how do we do it? Our main idea revolves around creating a digital ecosystem to offer personalized products and services. Welcome Digi Plus 1.0 strategy. We want to build a system that should be such that it can be accessed at 2 a.m. in the night when someone scrolling through Instagram looks at our post and has the sudden realization that I want to get in on this. They should be able to get through with the entire onboarding process in 5 to 10 clicks max. Indian millennials spend an average of 108 minutes on YouTube and approximately 165 minutes on different social media sites. Therefore, the perfect avenue to target a millennial or a Gen Z is online media. Specifically talking about an example of an Indian YouTuber, Tanmay Bhatt reached millions of young Indians through his channel Honestly, where he talks about finance and investing at an early age. Influencers like him can actively influence the youth towards insurance by highlighting the needs in a very simple language with the added flavor of comedy. Popular brands such as CoinDCX and Mamaearth have collaborated with multiple comedians, and this has led to higher brand recognition converting into sales thanks to the referral codes that are provided by the influencer. With products like insurance, there needs to be an aspirational value for millennials. They need to be educated in a way that they think of insurance as a necessity. With the right collaborations, maximum value can be created. There are different finance podcasts by various financial leaders and portals like FinShort, which can also function as corporate agents and have high engagement for affluent millennial class. The audience who believes in listening to these podcasts generally update themselves before going to sleep and are most likely to understand and adopt the concept of life insurance. We believe gone are the days that we had an actor wearing a lab coat claiming unreal recommendations for millennials and Gen Z. Watching a TV ad wouldn't just cut it for them anymore. Now to show you how it would work in practice, we take an example of what would be Sana's touchpoints throughout the campaign. Making the process completely digital, we propose once Sana clicks on the link that directly invites her to our chatbot, she would be assisted by a chatbot in her language of choice, where her natural query, say, I want to buy an insurance with high tax benefits, or I want to buy an insurance that can give me a defined return in the future, can offer her products of her choice from the pool of different offered products. The preliminary verification can be done through augmented AI, where her documents and identification cards would be verified, which would speed the onboarding process. Post this, the chatbot would redirect her to the website where she can investigate more details about the product and then close the purchase. With minimal number of clicks, we plan to fast track the onboarding process to avoid any form of second thoughts or procrastination, which, like we already said, is very prevalent in today's millennials. If Sana chooses to onboard through a mobile application, we plan to assist her onboarding through eKYC using convolutional neural network, where she can scan the card using her phone camera and click a picture using an identity card. This is again a very popular practice in the fintech space, especially in discount brokers. Optical character recognition or OCR can be used for document verification and form filling. She can log in through social media platforms, which gives us additional data to fast track the onboarding process before she's redirected to a page that recommends her product offering. We'll be using this prototype to explain to you how she can quickly access and customize her insurance plan through an attractive UI, keeping her engaged on the application. Here you can see how she can make changes with small little clicks, and all she needs to do is tell us something about herself, make her choice, and we'll have a customized product ready for her purchase.
Now, how do we get them on board? A generation that finds more meaning in paying for Netflix subscription than something that serves as a financial support to their kin in case of a mishap. Well, why not give them an insurance at a price of a Netflix subscription fee? This will slowly inculcate a habit and build a conscious financial decision among this young generation. Coffee insurance and insurance at a price of an average Starbucks coffee is what we need for them to understand the benefits of having an insurance policy. These are small ticket, low tenure product tailored for young generation needs. Once the benefit of this is understood, the customers can then be offered the conventional ticket size insurance. The major selling point to the millennial are how one financial instrument can serve dual purpose of providing life cover and wealth creation. Despite the recent government norm on ULIP, it can still serve tax benefit and act as a safe investment in the portfolio of millennials, as the new norms are applicable on the ticket size of 2.5 lakhs rupees or higher, which is way above what an average millennial would spend on an insurance product. Milestone plan can be another hit choice for an early adopter of insurance, as we believe this would appeal to the millennials because the benefit increases as and when they level up in their life goals. From our primary research, we could gauge that life insurance as a standalone product may be a little difficult to sell. But if you bundle them with add-on, it serves as a great opportunity to cross-sell life products. As part of our DG Plus 1.0 strategy, we bring to you Build Your Own Bundle, or BYOB, just how the millennials want it. We plan to provide an AI-based recommendation platform to upsell and cross-sell different life insurance products. With direct selling channel, life products can be bundled together and the increased benefits can be provided to the customers with lesser costs. We can say, for example, if one covers themselves using a term plan, they can bundle it up with a ULIP. This is a choice that will be presented to the prospective customer and not a compulsion, something that the regulators are worried about. This will be done through collaborative filtering, something prevalent in the e-commerce websites and applications like Amazon and Lenskart. In the example we mentioned, the customer may want a life cover as well as something on their investment portfolio that can give them safer returns with higher benefits, and hence they become the right target audience for such bundled products. With the help of smart recommendation through aggregators, POSPs, and other common platforms, millennials can not only cover themselves using BALIC products, but also bundle them with BAGIC products and vice versa. Incentives can be provided to such platforms for better product placement so that it is easy and convenient for customers to buy more insurance products. With bundling such as this, Bajaj Group overall can be benefited. And with this, we plan to redefine product bundling in India, making it a voluntary choice rather than a compulsion. Moving on, who doesn't like to save more? Here we offer the tech-savvy millennials and Gen Z to voluntarily give access to data and get an opportunity to save more and lead a healthier lifestyle. This not only benefits the consumer, but also has a direct impact on our bottom line through less benefits paid. And also, it gives us a better insight into the customer lifestyle. Big data can later be used to complement the AI technology and improve our customer experience. Through integration with IoT, data from variable devices, car telematics, and social media history, it can help the AI assess how healthy the insuree is and what kind of practices does he indulge himself into. For example, does he go out to drink often? Does he walk the required 6,000 steps? Or what is his average heartbeat or stress meter? With key insights like that, it is easier to build a predictive model that can help price the premium better and understand the key risk area, and hence move from a general product-based pricing to a person-based pricing. As much as 67% of the insurance shoppers, especially millennials, expect post-purchase engagement from brands. We'll do that firstly by providing them with value-added services like fitness app subscription and offer complimentary annual health checkups, maternity checkups, and continuous product recommendation as per updated user data. This will make sure the customers are well served, and it will also help us boost the net promoter score and CSAT score in the long haul. Apart from that, we propose to create a community of smart investors on Instagram, which we'll call Humans of Investing, a small adaptation from Humans of Bombay, where our customers will talk about the advantages of having an insurance and smart investing in forms of short story or testimonials, which will be used for educating fellow millennials about the benefits of having an insurance and wealth management. Moving on, we want you to meet Aman, Sana's younger brother. He is your new age tech loving Gen Z who's always willing to try the newest thing in the market. Aman mostly invests in NFT and cryptos. He believes equity market is too boring for him. Aman is a gamer, a dog lover, and much like people of his age, he vaguely knows anything about insurance and reaches out to his sister for traditional investment needs. Now, how do we get this young Gen Z on board? We provide him with what he needs now and make sure it's innovative. We want him to enjoy the experience and refer to his friends to join our program. Once Aman or someone of his age reaches a milestone, there will be a requirement for life insurance, and then we will be the go-to company that Aman would come to for his life insurance need. Now, what can that innovative product be? Inspired from insurance based out of US, we propose P2P insurance, which is the next hot thing in the insurance industry. Lemonade Insurance uses this form of insurance to onboard new age clients who are looking to mitigate various risks that in other cases will not be catered by a traditional insurer. It is a risk sharing model rather than a risk transfer model where a bunch of individuals pool in funds for similar purpose, and in case one person needs to claim the insurance, they do so via raising a request with adequate proof and verified by the felicitator. The claimant then gets the required fund from the pool. Here, Bajaj will take 8 to 10% platform commission and provide reinsurance benefits in case the pool isn't sufficient to pay for the claim. For people like Aman who have a strong community of gamers, they can insure their gaming councils. Even the adventurous tourists can insure their travel endeavors. The scope is almost never ending.
Now you must be wondering, what happens to the premium pool if the facilitator only takes 8 to 10%? In case of P2P insurance, the unclaimed premium is either returned back to the customers in form of dividend or contributed to a social cause. With our strategy DigiPlus 1.0, we believe our goal is not only to make insurance easy, simple, and instant, but a social good rather than a necessary evil. We want to make it easy for our customers to do good. Since millennials find social causes worth paying more for, are more likely to go for a brand that they feel has a genuine commitment to change. So we will connect with them through the causes they care about. For example, the leftover premium can be donated to make neon dog tags to avoid road accidents at night. This not only harms the animal, but India records road accident as one of the biggest reasons for death in the millennial age group. It can be used to give sports merchandise or gaming console to children suffering from terminal diseases who cannot afford to buy them. So when the unused money will go to charity, it's not an extra payment from their pocket. It's simply due to good fortune that the unclaimed money rolls over to make a difference for someone else. Now to understand how to maximize the profitability on this, we projected the ideal distribution mix. We have taken conservative figures here to forecast the mix, where we believe the highest shift will be towards corporate agents, banks, and direct selling with a downward trend in individual agents. While addressing the age group of 30 to 41, corporate banks play a major role in selling the insurance. So we believe the proportion of direct selling and corporate agents or banks will be high. Talking about the financial, the model we built is for DigiPlus 1.0 strategy based on assumption and can be scaled according to the policies sold. The policies handled is assumed to be 150 per day in the first year of operation. Since the mode of sale is digital, we have multiplied it via 360 and not 252 working days to incorporate round the clock anytime, anywhere onboarding. Upon reaching milestone 4, we believe that the company can sell approximately 14,000 policies in a day using DigiPlus 1.0 strategy. We have been aggressive on our advertisement as compared to revenue. It is almost double of the current levels, but in order to capture this generation who is not brand loyal, it is important to move first and fast. We have increased the R&D expense and technology cost at a CAGR of 20% to incorporate the constant changes in technological innovation space. In the upcoming years, we envision that all the talks and AGMs can be done under a metaverse, where there will be stalls that a millennial or Gen Z can merely click and start off with the insurance process. This will increase the engagement like never seen before through a technology platform. The salary benefits and other manpower costs is projected to increase. However, we reduce our dependency on individual agents and reduce workforce while paying higher to the corporate agents and banks so that they can promote our products over rivals. Higher scalability and operational efficiency through smart technology adoption can lead the company towards a higher net profit margin. The profit margin of over 40% elsewhere cannot be achieved using traditional methods in the long haul, considering the competing pool. We believe DigiPlus 1.0 strategy has a bright prospect to help shape the vision of the company onto the journey of being an insurtech. In the current life insurance ecosystem, DigiPlus 1.0 strategy will help to reach out the right customers at the right time. The journey starts with a first milestone where we launch digital drive and redirect our promotion strategies to meaningful mediums. This includes smartly adopting the new NLP-backed chatbot, which will help speed up the entire process and launch of our referral program. Further, in milestone 2, the distribution mix is to improve with the launch of peer-to-peer insurance platform, as this is something that would be directly sold to the customers, majorly targeting age group below 30. Our milestone 3 would be when we have created enough engagement on the platform. It would be an ideal time to launch our low-ticket life product, the coffee insurance, priced at $199. This would help convert those customers who are in the edge with insurance and help them realize the benefit of the insurance. We believe at this stage, our major marketing tool would be word of mouth and referral program, as this has proved to be highly successful in this age group. And our last milestone is to embark on the complete digital onboarding to the customers and passing on the benefit of reduced overheads. The company can achieve stronger bottom line and maintain current levels of profitability around 40% and even more in the long run. We thank you for your time.
Can we have the question and answer, please?
Yes. Thank you so much, Ganged Up Gryffindors. Over to the panelists for any questions.
I don't have any question. So, Tarun, anything?
I like to ask one. So, can I get the screen and I can see people? I think it's still the presentation on. Can we take the presentation down, please?
Sure. Yes, sir.
Yeah, no, it's better. Okay. So, did you buy a life insurance after the research? Any one of you? You got convinced that you had to miss what was given by I should have taken this life policy. Did anyone buy it? No. So after all the research and getting a lot of depth and detailing.
Yes, sir. We did explore the option of getting into a ULIP because that's was something I felt like right for my.
My question is simple. Did you buy a
Sir, honestly, we were looking for more options that can be there in a ULIP.
But that's okay. The point remains is, itna research ke bhi nahi kharide. And no, you're telling that after your research, people start buying the moment you put it together. That's the first question I had. Second was the lemonade model in life seemed very interesting to me. It's typically a general insurance model, because you have to, it should be a short tail risk, which gets over to know your profit and loss. Typically, life policies are more long tail. And okay, how much did lemonade contribute to society? Because that excites millennials, so maybe that will help you buy. How much did lemonade contribute to society? Or how much does it contribute to society back, by all the profit that you said? Yeah.
Yes, so the Lemonade insurance, they out of the unclaimed premiums, it's not like a fixed amount. It's a variable percentage from it where they contribute.
Which I understand, but kitna rupees kiya quantum mein, to give you a perspective. Last year or before that, average of 3-4 years. Okay, less than $500,000. Let me help you guys. I said we are invested in that company, so I have some idea as Alliance, one of my partners. How much do you think my life company or the generations company, gives back to society in a year?
So approximately 2% of your net profit.
So how much will that be? Okay, just to keep the long story short, we give back to society much more than Lemonade does with all this.
Yes, so that's absolutely true.
Yeah. So now will you buy our policies? Because we actually give to society and to all the cancer that you said. We actually do that. To road much more. So will you buy a policy now? Since the millennials so excited that we contribute to society a lot. So will you guys after logging off this go and say, let's buy a Baazigar policy, contribute to society much more than Lemonade does?
So absolutely. So okay, if that's okay, I'll take this. So basically, the difference here is that when Bajaj Allianz, for example, is using the profits for their CSR campaign, they're using their residual income, right? But when we're talking about the P2P model, this is not being done by Bajaj. Say that is technically being done by the insurees. their leftover premium is what is being.
So I'll just add to that so they don't get confused. What's a leftover premium? No, it's the same thing for us also.
Unclaimed. Yes,
unclaimed. वही है ना भैया. अपने लिए भी तो वही profit है. After my after my claims, it is a marketing gimmick in a way.
Sir, mostly in P2P model, what happens is if you have an unclaimed dividend, it is unclaimed premium. It is given out as dividends back to the insurees, and in this case, it is not because it's a risk transfer model. What Bajaj does, and this is a risk sharing. So basically,
I get your point. I want to say, just figure out कि actually कितना है मतलब. If I look at it like the insurance industry, I can't contribute on life, and this is my last comment, and then close it. Let's say general insurance industry. There's a combined ratio 117%, which means for 100 rupees that the company takes, 117 is the outgo. अब इसमें मैं बोलूँ कि unclaimed I'll give back. कहाँ dividend कहाँ आने वाला है? So typically, no, you actually look at when you quote a company, you should also research on other point. That's the only message I want to give you. Actually, what is happening? One is a statement. So you did the research, you found a statement on Lemonade. They said they'll do this. Very good. Now let's come to the other point of it. What did they do? So you don't research that. No, that's why this gap is in our communication. No. So my question is, let's say as journalist, I say I'll do this now. I'm combining 117. Typically, none of you will get any dividend back. No. It's already losing money. Yeah.
So the idea of us putting this, if I can, so the idea of putting this, the model there was that simply like, for example, Bajaj Allianz also gives out group insurance that has like a high loss ratio. Basically, you go and give employees say 25, 30 people. So basically, if you're targeting a Gen Z and they are that kind of generation that has a fear of missing out. So if you give them something new and innovative, then and then only at this age they want to get a part.
I just give you last one and close it. I don't want to take away time. I think I'm taking too much time.
Absolutely.
So we have this in the group policies. In the group health policy, we have this. That we claim ratio, let's say, is below 95, we shall pay the cash back. Okay, we have this, no? And we keep 4% as expenses. Obviously, we have to run the business, no? So do you think how much policy would have sold on this, no? Let's have 100 group policies. कितनी policy बेचोगे हमने इस पे? कि 95 के नीचे I'll pay the money back to you. It's actually there, or wherever you want to. So we give that money back to you. So out of 100, let's say if I take 100 policies, group policies which I have sold last year, let us say we must be running to lakhs, but let's say 100. How many do you think I sold on this? I have this policy of giving cash back.
Not a lot, maybe, because
0.
Yes.
In a blue moon, I sell one. Next year, they don't take it. Why?
Because the claims are more than what. So, sir, this is obviously that's where the reinsurance comes in, right? So, there's something that you have to also incorporated this. Just one closing statement.
Yeah,
absolutely. Just okay. So, but we did include that in our financial model. So that's the reason why we have.
So why would a reinsurer take loss-making businesses? Do you think reinsurers are stupid guys? तुमको पैसा नहीं बन रहा है, वो तो आप risk उठा लेंगे.
So because it's a brand name and they know you're not.
So they just take losses, is it? You should not join
for the first.
You should not join the company. You don't take losses just because you like it. Reinsurers only take businesses or reinsure where they feel they can make money. Everybody, I also do business where I feel I can make money. Nobody does business to feel that they'll take losses. So if I'm not making money, there'll be no reinsurance. For group health policy, there's no reinsurance available. Tarun recently faced it for his term policies. It became so expensive. Reinsurers don't just stand by it. Losses, it doesn't happen like that in the real world. Okay, we close it now. Thank you very much. I loved it. I really loved all the concept. I love the part of Lemonade in life. I never thought we can think of Lemonade as an example in the life. So to me, that was a very, very pleasant way of looking at things differently. I love your marketing campaign. I love everything. But that's why my question in my mind was that itna excited na bache. Did they buy life policy after all this research? So that's why I asked this question too. If the answer is no, then again your presentation has no relevance because it will not help us get millionaires. That was my thinking. No? Thank you very much.
Rajveer here has one life insurance, but he's just
no, but not he didn't buy it after this. पहले खरीदा होगा उसने. No, वो भी उसके father ने दिया हुआ gift में उसको. I can guarantee that. वो खुद जाकर खरीदा उसने. Okay, thank you very much. No?
Thank you, sir.
So on the whole, a good attempt, guys. Very holistic. a few glitches I would clearly identify. What we've given you is a pretty tough topic like every other. Millennials don't necessarily easily buy life insurance. I think the market research was very good. You pointed out all items. I think you tick all the boxes there. I think some glitches were more on the lines of mixing up life and general. And for example, wedding insurance, funeral insurance is not possible with life insurance. So things like that, I think there were some pieces missing. I think one other thing you could have looked at is a big element of research online, purchase offline, ROPO as we call it. I think that was I think a big thing that people are now doing, because all said and done, and your discussion with Tapan there. So life insurance is not an easy product, as you also said. So there would have to be an element of query. I like the NLP thought process, the chatbot, WhatsApp, that can be used very well for querying, and I think that's a good idea. We should look at as well as a company. The product suite on living benefits and not looking at death benefits as much is also an interesting one. Although I should tell you that a good percentage of youngsters are now buying term plans as well. We'll figure out the reason why they're buying. Maybe I was hoping you will tell us.
COVID.
But they are buying. They are buying as well. But thank you. Overall, a good effort.
Thank you, sir.
So I had a question for you guys. In a peer-to-peer kind of a context, right? Unless the entire group is well known to each other, how do you look to prevent, let's say, some kind of conflict of interest or fraud, within that that group itself?
So I'll take this question. So basically, when it comes to say taking a claim from a peer-to-peer insurance pool, so as we mentioned, like is a community of, let's say, a community of gamers or adventure tourists. So they are very, like, the community there, they know and feel for each other really well, even if they're not like personally acquainted to each other. Then there's obviously a component of moral hazard as well that you mentioned, which is there in like mostly in all the insurance. But when you're taking out the claims here, your entire claim will be verified by the facilitator, which is the Bajaj Group here itself. So when you're filing for a claim, you should have the necessary adequate proof, and you are paying for whatever damages or something that is there. If we are talking about, say, a consular, so you are paying it from your end, and then you're getting a claim back, right? And then there's obviously that component as well, the third component, where you have a social goal that is tailored to your specific group needs. So you would not want to jeopardize that just because you want to, just claim or unnecessarily file a false complaint. So these are a few checks and gaps that we have kept to make sure that there is no scope of this fraud in this.
Understood. And how much would the platform player in this case make as part of the premium?
So it would be somewhere around 8 to 10% from the for the starting part, because the risk is there. The risk is huge because we're talking about a group here which doesn't have a lot of historic backgrounds on earnings. So this is basically, since it's targeting to Gen Z, we want it to be somewhere around 8 to 10%, depending on what the risk and the background is of the.
So in a sense, all of the underwriting, the claims, etc., all have to be handled by the insurer within, let's say, 10% of the overall premium. Okay. All right. Thank you.
Thank you so much to all the panelists for all the questions. Thank you so much, team Ganged Up Gryffindors. It was a great presentation.
Baazigar, I think the next thing they do is to buy life insurance after.
Yes, definitely.
Yeah,
I think the first thing you guys have to do is go back home and buy your life insurance.
Yeah, a Bajaj life insurance, to be very specific.
Anyway, moving on to the next team. So we have team Catalyst with us, who are from FMS Delhi. We have Gandhi Nisar, Karan Datta, Saurav Mani, and Aditi Agarwal. Welcome, guys. I hope all of you are present. And yes, you can take over and present your screens. Best of luck to you guys.
All the best, guys.
Thank you.
Thank you.
Is my screen visible?
Yes, you can please go ahead.
Yes.
Good afternoon, panel. We are Team Catalyst from FMS Delhi, and we are here to present a solution for the health insurance sales distribution strategy. We first try to look at the current market scenario to understand how distribution works right now. Unsurprisingly, we found that majority of the health and general insurers offices were located in urban areas, and the total penetration, that is ratio of the premiums to the GDP, was just 0.32%. The industry, however, saw a good CAGR of 19%, which was primarily fueled by COVID, and with higher awareness levels, the next few years will be crucial for the growth of the industry. Now we look at the operational and financial challenges facing the entire distribution process. There's a significant amount of data collected from customers, but generating timely insights to effectively put that into use is certainly a challenge. Low conversion online reflects either a lack of trust or low customer experience across digital mediums. With acquisition costing as much as 9 times as compared to retention, it is tough to find the right leads and appropriate plan of action for each lead. There are various customer segments with varying needs. Identifying these needs and acting accordingly is a mammoth task, as there is no one-size-fits-all solution. And finally, with high technological costs and commissions, capturing a decent return on investment on a regular basis is perhaps one of the biggest challenges faced during distribution. To tackle these issues, we have designed a 3-pronged strategy. Our key focus area is one, process integration, that focuses on the entire sales process, right from lead capturing to the conversions. A digital distribution strategy that focuses on the online customer experience, and a propensity model that helps generate actionable insights from customer data to eventually customize the entire approach towards engagement.
A huge amount of insurance business is transacted using manual processes that are inefficient, costly, and prone to error. Lack of standardized lead processing results in wastage of resources on unqualified leads, and also the time-consuming and cumbersome manual quotation approval process, especially in the case of group quotations, results in poor efficiency and loss of business. Through process integration, we are looking to streamline the entire process by a centralized enterprise platform, which is providing 360-degree view, leading to enhanced cross-sell capabilities and increasing process efficiency by increasing quote generation capacity, delivering an optimal experience for all users, especially group or commercial business quotation cycle with high premium amounts. Multi-channel lead capturing supports capturing leads from online and offline channels. It also allows capturing policy inquiries from your website, social channels, PPC campaigns, phone calls, cross-promotional events, and broker leads to generate detailed insights into lead quality, conversions, and revenue attribution for each source. This data-driven sales process will help improve conversion rates. The leads would be uniquely captured for each channel, like API integration for marketplaces like Baazigar, or tracking completion and drop rates of multi-page forms from self-serve portals, or tracking conversations over web forms and chat tools to understand their intent and timely connection with the lead. Further, conversion-centric landing pages, inbuilt social media connectors will assist tracking response from every digital advertising source, reducing the cost per lead by planning marketing budget accordingly. The captured leads are then distributed among salespeople using hybrid push-pull based automatic lead distribution based on different criteria, including agent availability, past performance, insurance product specialty, application quality, and lead limit. Agent and lead attributes and deal-based factors will be considered for the lead distribution algorithm. This would reduce redundant follow-ups and establish single point of contact for lead conversion. Automatic redistribution of orphan leads due to churned agents based on secondary criterions, Uberization of lead assessment, based on field agent locations, and capping leads would further avoid loss of opportunity. Followed by intelligent sales automation of all back-end and low-value tasks to reduce manual data entry and follow-up time will accelerate the quotation generation process. The following quotation approval workflow supports multi-channel quotation requests. All quotation data coming in a structured format gets auto-ingested into the workflow, reducing the manual effort of data entry, accelerating the quotation generation process. Then the system automatically rules out duplicate quotation requests in a specified period of time. Validations like agent or broker company underwriter combination are also auto-executed to route requests accordingly. Once the mandatory checks and validations are done, the solution allows users to trigger premium calculation rules through benefit and risk management system. It triggers a different set of rules and ratings clubbed with auto or manual application of discounts, loadings, or exclusions. The solution identifies quotations that require underwriters' assistance for case evaluation and approvals. It automatically assigns such cases to approver based on the approval limits and authorities. In case the premium is recalculated to revise the quotation post-registration, it will be auto-appended in the system. Lead differentiation is a step ahead to identify sales-ready leads and sort them into priorities based on lead scores to help improve productivity of sales staff as well as streamline the sales processes. Pre-planned steps will be automatically allotted or carried out to increase conversion and reduce the acquisition costs. Lead scoring will be done based on demographic attributes like age group, job title, location, etc. and activity attributes like web page activity, newsletter subscription, webinar or consultation, contacting sales representative, and marketplace activity. Post attribute identification, close rates will be calculated for each attribute, that is, number of successful sales based on the number of leads. The overall close rate will be compared with each attribute's close rate and assigned value accordingly. Based on the customer journey, minimum score will be allotted, and hence the leads will be segregated into high, medium, and low priority. However, to consider for changing customer journeys, parameters will be altered periodically by the automation software for efficient operations. The design, development, testing, and implementation is expected to be completed within 12 weeks by developing lead capturing software, followed by lead distribution software and sales automation software, which would then be completed by quotation automation within roughly 7 weeks of development and 5 weeks of implementation time. The streamlined digital sales process will result in higher sales staff productivity, and increased quotation generation capacity will reduce the turnaround time. A 360-degree customer view will enable us to provide optimal user experience, increasing the conversion and persistency ratio while also reducing the costs by increasing process efficiency.
The coronavirus pandemic is accelerating the use of digital platforms in India, offering insurers a vital new pathway to connect with and serve customers. However, when it comes to confidence and trust while purchasing insurance digitally, the level drops off significantly across age groups. Although Gen Z and millennials still have a certain sense of belief owing to their regular usage and familiarity with the online platform. Now, while there are certain advantages of the online medium, be it the application process, pricing, or claims, the challenges posed by lack of assistance, product mapping, and policy understanding are major roadblocks in growth of this channel. Customers feel bombarded with information and are unable to navigate the complex processes that are put in place across this platform. This is what we'll be trying to address next. Now, we see that digital wallets and payment apps are the most trusted digital channels for insurance purchase, followed by company websites. Bajaj Alliance's partnership with PhonePe for both health and life insurance is a nod to this emerging trend. We explored potential external partnerships as well as internal improvements, and based on our research and ideation, we will be focusing exclusively on the company website for potential strategic changes. Now, our major goal is to bridge the gap between the offline and the online service and provide an agent-like experience on the website itself. We explored the Bajaj Alliance website from a customer viewpoint to look at the existing structure and content and the challenges that one is likely to face. We realized that the structure, such as starting with quotation generation as opposed to basic guidance and policy walkthrough, is a stark difference from the offline channel. Further, highly textual information has very low probability of getting across the message, particularly when attention span of individuals is so low. Now, these are some of the core issues that we'll work on to provide a much better customer experience and create a new customer journey. For this, we first understood the offline transaction process between an agent and a customer, and it broadly starts with customer data collection, followed by policy recommendation based on data and desired goals, along with alternative options, and finally, clear and concise explanation of all the key components of the policy before final purchase. Now, this is what we'll be looking to replicate more or less, along with multiple additional features such as filtering options, product videos, and a ready reckoner to compare to provide a more visually appealing and engaging format. Now, we created a sample website to give a better view of what the changes would actually look like. Here we have divided the landing page into three main elements: basic guidance, policy search, and testimonial. The updated chatbot feature replies with further potential heads that customers might be interested in and does not request email or mobile information immediately. Basic guidance would cover content around insurance needs, key terminology, how to purchase insurance, etc. And now we look at the policy search process. It begins with basic data collection along with snippets of information that might be useful for the customers when trying to make certain policy decisions, like the impact of residence and medical tests on premiums and claims respectively. Next, we follow it up with the recommended sum assured and expected premium amounts that one is likely to pay based on the previous data collected, along with additional options to increase the sum assured and the respective jump one might see in their premium if they do so. Now, this is followed by suitable policies and a filter that ensures customers can select all the key features that they desire for their policy, be it specific health coverages or a no co-payment clause, and then accordingly look at potential options that are presented to them. Customers can then look at the policies in depth through key features and elements that are provided here. They can also click a link to read the policy document provided for those who want to delve deeper into the policy. And finally, we have the policy comparison feature, which can be displayed at two different stages. First, at the point of filtering, in case customers want to explore all options. And secondly, after final selection, to give a quick viewpoint of what they chose and the alternatives, providing transparency and clarity throughout the purchase decision-making process. We believe that these changes could significantly reduce the drop-off rates on the website and boost conversions, bridging the gap between the offline and the online. Now, to find the revenue impact of our strategy, we first calculated the costs, which amount to approximately 1.4 crores. Now, if you look at the distribution channel, we see that contribution of individual agents has remained constant for the past few years. This is where we want to reduce this contribution and increase the business generated from direct resources from 36% to 40% in the next 2 years and up to 45% in the next 10 years. We calculated the current individual agent commissions paid and the expected commissions with a new contribution level. And this gives us a savings of about 12.6 crores. With average policy duration of 10 years and given persistency and discounting factor, we calculated the total savings from commissions roughly amounting to 49 crores. Now, impact factor recognizes the existing growth in the direct business and the immediate impact of our strategy on it, giving us a final ROI of 242% with high upside from a long-term standpoint as well.
Now we get into our propensity model. We realize that the health insurance industry has a diverse set of customers with each segment presenting their own challenges and perks towards insurance distribution. From a survey conducted about individuals' concerns regarding purchase of a health insurance policy, we find that people in the lower income are worried about affordability and low hospital empanelment, while people in the higher income level segments find the terms and conditions confusing and lack trust towards the industry. While these are basic differences between segments that are generally kept in mind, there are other factors like purchase stage, desired protection, past experience, and interactions among others that may be overlooked when trying to build a targeting strategy for specific individuals. That is what we'll be addressing through our model by bringing in analytics in the end-to-end process for any customer and building a distinct conversion or retention strategy based on factors that will be deemed essential and crucial. This will be done using data-generated insights, which would help bucket customers into different groups and help us develop appropriate strategies for each one of them. Further, the model would continue to evolve based on previous iterations and results to consistently improve its performance. Here, the propensity model can help Bajaj create a comprehensive roadmap for managing the entire life cycle of a customer, from acquisition to lapse or maturity. Allocation of resources to obtain optimum return on investment by looking at a combination of demographic, transactional, psychographic, and personality information. The who, the what, and why about the purchases of the person will provide useful information about the attitudes, personalities, and help understand and project the preferences, the lifetime potential, and the needs of the customer. This will be utilized to design an efficient marketing strategy and push the correct product to the appropriate customer. Also, the weights of these factors would vary as the purchase stage of a person changes. The risk of lapsation model will categorize risk of lapse in the renewal based on channels, transactional data, and past experience. This pre-categorization before the renewal cycle will help in understanding the reasons behind high risks and take appropriate actions. Lapsation due to channel breakdown can be prevented, while any customer dissatisfaction can be effectively dealt with. The subsequent propensity model was developed by analyzing customer behavior based on demographics, psychographics, company engagement, user behavior, and past experience factors to understand the propensity to purchase or renew. Firstly, exploratory data analysis was conducted to understand and filter the data and outliers biasing the dataset. The specific target definition was to identify the most prominent factors. First step was to reduce the number of variables based on correlation funnel and then perform feature exploration based on business understanding and eliminating variables that had high correlation with purchase. However, provided little insight before the action. For example, the duration of the phone call with the executives was excluded as it is unknown before a call. Finally, the variable selection was done using R-square and chi-square methods to avoid overfitting or underfitting of the subsequent machine learning algorithms. Here is a quick overview of the best model from multiple machine learning algorithms tested. The best results were obtained from a hybrid decision tree ML algorithm based on statistical hypothesis test and entropy model with the characteristics as mentioned on the slide. For visualization purposes, only top 2 levels of the whole tree structure are shown. This model was designed to optimize for multiple goals for a single propensity bucket. The most important part of training and optimizing the model is the performance evaluation. These metrics were also used to derive conclusions from the model. The fitting of the model to predict the training and testing dataset would give the testing accuracy by finding the area under the curve and then predicting and bifurcating the accuracy of the model into various buckets. The comparison of multiple models based on true positives versus false positives would increase the confidence level of the final model by neglecting any data bias. Identifying the most important variables in the model would help understand factors that impact customers the most. And this was done using the dropout loss graphs of the variable by reflecting increasing error when an important variable was dropped out. Finally, impact of these important variables is accounted for to factor in the weightage in the decision making by plotting dependence profile to understand the individual level of impact.
Now, based on the model described earlier, customers are divided into multiple buckets based on the potential versus their propensity to convert. Each bucket is unique and provides significant opportunity and actionable guidance to realize the current and future potential of the prospects. For example, for a person under a score of 3, effort should be made to retain them through digital means and proper claim servicing by focusing on factors important from them at all while limiting CRM expenditure. This level of customized servicing is what we expect to achieve through the propensity model. Here, we have tried to see the possible strategy for 3 key groups based on our propensity scoring. A customer lying in the propensity bucket with a score 5 will most probably belong to the middle income level and be a major value seeker. Their pain point can be a lack of trust. So a tailored strategy for them would focus on minimizing mis-selling and having quick complaint redressal system. Similarly, urban millennials in the middle and high income level might fall in the bucket score of 7. To address their main pain point of complex terms and conditions, having bite-sized contents across social media with a clear call to action can be a good strategy. To target this segment effectively in the early stages of their career, we can have corporate types for workshops and activities that can boost engagement and awareness among this segment. The process of propensity model begins with processing customer data from various sources and understanding its lifetime value and risk of lapsation as explained earlier. Further, customers will be bucketed based on customer-specific pain points and preferences to identify bucket-specific acquisition and retention strategy. Finally, actionable insights will be provided for each customer bucket based on the previously assessed profile. If we talk about the impact created by these measures, we can increase conversion rate, persistency ratio, ROI, lifetime value, which allows us to run a very targeted campaign. So we believe that with this propensity model that focuses on generating insights and more customer engagement and an efficient sales distribution channel, we have an end-to-end solution to the existing distribution challenges faced that will help Bajaj to significantly pull health insurance across customer segments in a sustainable and cost-effective manner. Thank you, Judy. We are open for questions.
I'll go with first question. I think comprehensive, lot of content on the presentation. I'll have to take 2 days to understand the full length and breadth. You guys deployed a lot of models. Did you have any data or it's a proposed model?
Yes, sir. So we had a sample data, and we had processed the data, and from there only we have identified which is the most efficient machine learning algorithm, and that is what we are proposing. And based on that, we were also able to identify customer specific insights, which helped us help us identify that why a customer has a high risk of lapsation, or why a customer has a low propensity to convert, or something like that. So that would help us understand why and how to deal with that customer and what should be done in order to increase the propensity, basically.
How did you guys manage data?
Sir, we downloaded it from a server, from a database that is available with my undergrad college, which is near my university, where for the management institute, they have this big EMIS data set where there was this health insurance data and customer preferences.
Got it. You have referred a lot of charts. What is the need gap of customers, etc. I didn't see source anywhere.
Right. So the insights with respect to the pain points, also with respect to what the customers want, was based on primary as well as secondary research. So our primary research basically involved a lot of in-depth interviews with people belonging to different demographics and different segments that we were targeting. Secondary data was primarily sourced from consultant reports and white papers by Bain, BCG, and McKinsey.
Did you guys experience any health insurance sales process of any of the providers during this project?
And
who stands out? Who stands out? Yeah, go ahead.
Sorry, sir, can you repeat the last word?
My question is, did you experience the health insurance buying process of any of the either online aggregators or any of the insurance company? And if you have, then in your experience, who stands out?
Sir, during the while I was researching for the presentation, I had a talk with the sales executive of LIC. So our communication was not on the customer side of things, but more so on the business side of things, because we wanted to derive an outcome which could be feasible and also helpful for the business.
No, you guys didn't experience the sales process?
Sir, I did. So
get a quote.
During COVID, when my dad was ill, so we went to I handled the health insurance renewal process for my family, and at that time I came across what all documents need to be submitted and how is the overall process. So that was an experience, and then for this project I connected to my relationship manager of Yes Bank and HDFC Bank. And because that's where we have our personal accounts, and we understood how is the whole process, what leads to improper claims and what leads to lower customer persistence.
All right, understood. Very comprehensive work. You guys have worked very hard. All right, thank you. I don't have any more questions. Anybody else?
Thank you so much, Devanka. Yes, Tapan sir.
Yeah, so your learning, you mentioned you went through the claim process and then the purchase. What is the learning in the claim process?
So one of the learning that I gained from there was that sometimes what happens is that if you have a previous illness, let's say for which you did an operation 3 years back, but you don't reveal that or you don't submit appropriate document to the insurer. And what happens is that next time that disease reoccurs and doctors understand that this is not the first time, then the claim process stops there, because what happens is that there needs to be this documentation of the past experience or the past consultation of doctor and all. So that was one of the learning. Another thing was that there was a mis-selling problem where proper needs were not identified for the consumer. And what used to happen is that he was mis-sold a property policy due to mismanagement or misunderstanding of the needs, which was the major cause that the persistency ratio dropped significantly in the first year, and overall for the 5 years it was less than 50%.
One more aspect for the claims process. What we understood from different customer interactions was customers feel that the companies do not provide the level of claims that they should, that they're trying to rip off the customer. So that is where we researched the claims ratios for different companies, and we found that generally it is 95 or higher as far as major companies are concerned. So that sort of information is either not conveyed to the customer, or customer doesn't feel satisfied with the information that is provided. So what we also tried to do was, in the basic guidance that we tried to provide on the website itself, we want to have two main elements. First is the claims ratios that is being provided by the company year on year. And second is the major reasons why claims were not processed, so that customers know that the right information needs to be put in by them, so they can ensure that the claims that they're supposed to get aren't rejected due to any faults that they're tackling in the entire process. So those were the elements that we were trying to cover through the online website.
So what is the learning for the four of you in terms of health insurance? Would you buy one or you not buy one? If so, why?
Buying health insurance is a no-brainer, because as Aditi mentioned in the slide, that we have a CAGR of 19% as rising healthcare costs. But now I can also, I'm more empowered to buy the right policy for myself.
No, but have you guys purchased or not purchased? This is a question I'm asking. That's okay.
Yes, sir. So 3 of us already had the family group insurance that is usually there. So our parents already had it. And Saurav himself did not have it, but he pondered over it. And last month he also bought that one. So this project actually helped us understand the insurance better, and how to compare those, and what should we as a user or as a consumer pay attention to before buying.
So when you get a job, your family health insurance, father will trigger or not trigger?
So repeat the question.
The moment you guys get a job, because you said 3 of us have family insurance with our parents, will their family health insurance trigger if they get a job?
When I get a job, I'll personally purchase a health insurance policy for my entire family, and I will choose the correct one. So I don't know, and haven't read the policy in depth whether it will trigger or not.
The second question, which is the right policy you'll buy? This is my last one. I'll just finish with it. I don't understand how much have you researched on policies?
So the right policy to buy is basically, first of all, you have to go into your medical history. How much do we actually need, and where do we live? After we take a look into those factors, then we see how much are we willing to spend on a policy. Having an end-to-end policy is always better. But having sometimes for critical illnesses can be a good option if we don't have that much spending capacity on premiums. So then there are some ways of assessing if the policy is right or not, by if the policy has a room rent cap, or if there's a co-payment clause and things like that. So keeping an eye out for these things is a good idea while purchasing a good health insurance policy.
Also, sir, we are not agents, so we are not exactly best suited to recommend the right policy for people. For that very reason, we have suggested improvements on the website where you can input your profile and Bajaj, Allianz, and FinServ basically tell us what's the right policy for me. So, as a consumer, I can definitely look at the terms. And what I understood, my personal takeaway was that the cheapest policy is not always the best one, and that is, or the most expensive one is not the best one. So that is something that consumers our age should look at and read the fine print and see what the empanelment is like.
Okay, just my word of advice. I close it. All of you should have a good health policy of your own, not dependent on your parents have it or don't have it. First question there. Second is that in buying a policy, if you look at a top up, you didn't mention, you take a base away, that's very cheap for a huge sum of money. It's better than taking a pure critical illness policy. If you have critical also top up, it's very good, but top up is what you should be looking at. Third, the premium for health will never be so expensive that you can't afford it. So that again is something which people a lot of time thinks through it. But you can very well afford a dinner with your friends in a bar, and this costs cheaper than that for the entire year. If you take the full blown policy also. So it's not that expensive. But I strongly recommend all of you should have it. I think that's why I'm trying to figure out, did you get that feeling after going through it or not? And nothing but your case history, it has no relevance. And why should you have it now? Because as you get older, and that's what he mentioned, the claims, anything which is pre-existing doesn't get paid. Insurance companies pay very well. The only thing they don't pay is if you had a pre-existing illness, not declared, exactly what he said. So I think his answer is very good. They'll not get paid. As you get older, you'll have pre-existing diseases. So you should always buy a good health policy, very young on a standalone basis, not dependent on what a company gives you, not dependent on what you have it. Thank you very much. I think a very comprehensive presentation.
Thank you, sir.
Thank you.
Thank you so much.
Thank you so much to all the panelists for all your inputs and advice and your questions. Thank you so much, Team Catalyst. Great work done there. Very, very, very detailed presentation.
I agree, Malvika. The level of detail they had and the customer segmentation they put was really good. Let's now call upon the next team. Soda water bottle opener wala. I would like to call Swayam Prabha and Kanishk from the team.
Yeah, I think we have Ashish and Jyotri's also. All of you from Team 5, please raise your hands.
Hands, please. Yeah.
So that your videos are tagged first. And yes, over to you guys. Best of luck, everyone.
Is my screen visible?
Yes, you can start.
Thank you. Good evening, panel members. We are excited to present our idea to the problem statement posed for FinServ Markets platform in the finals of Bajaj Atom Challenge. To begin with, I'll brief about our idea, talk about our research, and my teammates would walk us through the user expectations and deep dive in our proposed ideas. So why did we choose this problem statement? We as a team see markets becoming the tech spearhead for Bajaj FinServ Group. We believe FinServ Markets platform has a great scalable opportunity and presents amazing growth opportunity for this group. For FinServ to achieve this growth, we are proposing to implement some improvements in the existing app upfront and then incorporate two main features in the FinServ Markets app. First and foremost, we'll talk about some tactical improvements like improving search feature, increasing payment options at eStore, implementing data analytics, etc. to increase user satisfaction in the existing app. We'll then discuss our main idea, that is of creating a financial advisory marketplace. It will be a platform where consumers and financial advisors can come and interact. This we believe can be a great attraction to get users on the markets platform and enable cross-selling. Our second idea is that of incorporating a bill now, pay later feature. This will mainly focus on automating the utility bill payments done on a monthly basis. This would be done through providing a 1-month interest-free credit facility to the users. Over time, this will also engage users in multiple financial offerings, increasing the product per sold customer metric. Moving on, I'll quickly discuss the major industry trends we have observed. Firstly, the fintech landscape as a whole is expected to grow at a very high rate of 25% CAGR till 26. The major growth drivers being tech enhancement, good internet access, and emerging tech-savvy millennials. COVID has further accelerated this process. Secondly, there is a race among fintechs and corporates to create a financial services super app. And these are dominant in South Asian markets as well. Indian conglomerates like RIL, Tata, Paytm are also in the hold to acquire and create capabilities in all spaces to launch a super app. Thirdly, we have observed that buy now, pay later feature would pan out to be a big lure for users in the future. This BNPL is seen as an easier and accessible offering as compared to a credit card. BNPL is seen as a suitable point of sale financing as well and is growing at a rapid pace with estimated 100 million customers expected by 2025. Now my teammate Swayamprabha would take us through the customer profiling and our primary research.
Thank you, Kanishk. So to understand the consumer mentality about financial services platforms, we conducted depth interviews of 15 people and a survey with 97 responses. We could divide them into different cohorts. The first one is of corporate employees who are salaried, have high savings, are tech savvy, and are concerned with the number of investment options and offerings in the EMI store. The second cohort is young professionals, salaried employees or students. Their main concern with any platform is its user interface. And since they are financially unaware, they require effective communication from salespersons. The next cohort is middle income group who are financially unaware and have trust issues with technology. Coming to the cohort that comprises of retired people and homemaker, they have high savings, they could invest, but are not tech savvy and do lack trust in technology. The final cohort is of young businessmen looking for loans and investment options. Next slide, please. Yes, so this is our survey that clearly communicates that 79.4% of the population uses tech-enabled financial services platforms. 78.4% of them confirm a need for financial advisory. FinServ Markets, however, ranks low on awareness and user base when compared to other platforms such as Google Pay or Paytm. Next slide, please. Now let us understand the user pain points. It starts with app functionality related pain points, and then we'll move on to loans, investments, insurance, and e-store. So let's understand the app functionality related pain points. It starts with confusion in finding the correct application on Play Store because there are two offerings from Bajaj FinServ and FinServ Markets. There are also multiple menus in the app that makes it challenging to navigate in and find the required feature at the right time. The app crashes frequently and has high downtime. There are also reported payment and transaction failures. There is also an availability of some unnecessary features like the step counters, which distracts the user from the financial offerings. Coming to the loans. So in all segments, including loans, insurance, investments, and e-stores, we have fewer offerings when compared to the competition. Securing a loan is a lengthy process and there is a lack of support from the banking partners. The consumers have also reported many spam calls. Coming to insurance, it's not a hassle-free process. The user must enter data again and again, and the price is not directly listed with the plan. There is a repeated need to ask for a quote. This makes the process lengthy and tedious. Coming to e-store, we have limited number of offerings, and the offerings are cheaper and greater in the competitor websites. The delivery time is also reportedly longer. Finally, coming to investments, apart from the limited offerings, the partnership with Finity ending can leave a gap in the investment section of the app. Next slide, please. Now let us understand the consumer journey. So now we have ranked FinServ Markets on a scale of 5 with respect to the competition. As you can see, it begins with awareness, and the user there reads blogs and reviews and chooses, understands the product. Going to evaluation, where he finds out which product he has to go for. Coming to use and delivery, where there is a seamless transaction and the user receives the product. Followed by customer service, where the user lodges a complaint and the brand is required to resolve it. Finally, loyalty, where customer, after a delightful experience, revisits the app and shares the experience to his family and friends. Now, my teammate Ashish would continue.
Next slide, please. Yeah, thank you. Thank you, Swam Prabha, and a very good evening to the esteemed panelists. Now, we will walk you through the ideas that we propose in detail. The first idea is a set of tactical improvements for the various pain points that we have identified and which are faced by the users of Markets app. I'll start with the user interface. Multiple menu options, both at the top and the bottom of the screen, occupy the start screen real estate, which is the most important screen for grabbing users' attention. A hamburger side pane like Gmail could be used for multiple menu options. Also, there is no vernacular language support in the app. We can start with popular vernacular languages like Hindi, Marathi, Bengali, etc. to cater better to the financing needs of the vast segment of middle-income business persons. Now let's take a deep dive into the eStore experience. Clicking on the eStore link opens up a browser frame within the app. This does not give a very cohesive experience of a super app that we are targeting. A super app should include all the features in the native Android look for the best user experience. One of the biggest pain points is that the EMI store lacks a robust search feature. The eStore tab in the app does not have a search bar. A user would first have to click on any random product, which would open a new browser frame, and only then they can search any product. We assert that modern technologies like natural language processing should be employed to build a comprehensive and resilient search feature, which can search products based on frequency, recency, and relevance to the user. Support for contemporary languages like English and voice-based search should also be deployed with the help of available platforms like Google's speech-to-text engine. Next slide, please. Now we look at the checkout options in the EMI store. While we understand it is primarily targeting the EMI card holders, we believe it should not just be restricted to them. Checkout options for people who don't hold the EMI card but have a Pincer Pay wallet, or as a matter of fact, any debit or credit card should be made available. We could advertise benefits of EMI card, like you could save rupees 3,000 through EMI card. Open payment options will result in maximum checkout conversions and partners' goodwill. We need to differentiate ourselves from giants like Amazon and Flipkart, which also offer no-cost EMIs through credit cards. We could do that by offering more SKUs through more partners and implementing better delivery time. Next slide, please. Next is optimizing the screen real estate. We assert that the advertisements should not cover more than 50% of the screen space to ensure minimum number of clicks and scrolls for a better feature. The Pay tab in Markets app shows 2 carousels offer campaigns, which pushes the key features like bill payments down. We propose that at max 1 carousel to be put for campaigns and focus on key offerings should be made. Upon checking the app yesterday only, we observed that Bajaj seems to be already working on it. We can also include a smart chatbot in our super app to keep it engaging for the customers and increase customer satisfaction. Next, we would like to employ data analytics tools. As we know, data is the new oil in today's world. We need to be cognizant of this while devising our growth strategies. Thus, we can leverage data from our users' monthly bill payments and their credit and debit card activities with their prior permission to build a monthly expenditure profile, how much a user is willing to spend each month, how stable their expenditure is. With this, we can cross-sell curated loans at better interest rates and upsell our merchants premium credit cards at best prices. Now, my teammate Jodhpreet will walk you through idea number 2, the financial advisory marketplace.
Thank you, Ashish. Well, today, if I were to ask you how you could avail the services of a financial advisor, you would be stuck asking a friend for the same, or at best looking at SEBI's website for the list. Well, this is the problem we tend to solve. We propose a financial advisory marketplace where customers and advisors can come onto our platform. The users can sort the list of advisors based on factors like their location, while the advisors can get access to a larger variety of clients. The benefit of this platform is that we get new people into the Bajaj ecosystem to whom we can cross-sell other products as well. And later, if Bajaj plans to offer mutual funds via its AMC, the existing user base can be used to leapfrog subscriptions for the same. Can we move to the next slide, please? Yeah, this slide shows how the advisory platform look like in the mock screenshots. The homepage will showcase our bouquet of offerings. The advisors list page in the center shall allow the user to sort the advisors based on multiple factors, probably mainly their location. Finally, towards the right is the details page where the user can see the performance of recommendations made by the advisor and also has the option to contact the advisor. Can we move to the next slide, please? Advisors are a key stakeholder in our entire plan. So here we've outlined a plan to onboard advisors. We plan to approach them via the SEBI directory of advisors and demonstrate the benefits of the platform, like a larger customer base and investment management software. But onboarding the advisors is not the end of the process. We need to constantly review the advisors' performance. We would need to gauge the periodic reviews left by the users on the platform. We will provide them with incentives in order to get them to cross-sell other products via the Markets app. We would give them access to conferences as well as paid courses and certifications based on their performance, which we plan to measure via KPIs like user satisfaction as well as growth in assets under management. This would result in a win-win-win situation wherein the user gets access to quality services as per their convenience, the advisors get access to a larger customer base, and Bajaj Finserv Markets gets more users to whom we can cross-sell. Now, I would like to invite Ashish to talk about a third idea, which is Bill Now, Pay Later.
Thanks, Jotpreet. Now coming to idea number 3, the Bill Now, Pay Later system. One of the main pain points which is faced by the salaried employees today is taking care of the utility bill payments for themselves and their family members. Although there are a plethora of apps offering utility bill payments, almost no one offers an automated bill payment service conveniently. The ones that do, for example, HDFC SmartPay, require you to set up tedious mandates onto your bank account and maintain minimum balance at all times. We propose that all the monthly bills like LPG, DTH, broadband, mobile recharge, and electricity bills be automatically paid by a Bill Now, Pay Later system for an entire calendar month. At the first day of the next calendar month, a consolidated invoice bill should be generated to be automatically paid by the user's bank account within a week. This would relieve the users to remember all the bill payments dates and would make lives much easier. Once habituated to the service, users would not leave the convenience. This would increase user retention. The BNPL, that is the Bill Now, Pay Later, will be offered to new to credit customers. The limit would be determined according to their income, and repayments will automatically be made through their bank accounts. As we would have the data about their monthly utility expenditures, we can use it to cross-sell products like credit cards and personal loans to the retained users, solving our problem statement to increase the PPC metric. Next, we take a look at the mocks. We have the home page where the users may enter the system, the repayments page where the users will see the amount to be repaid, and the passbook page, which would list out all the transactions that were done automatically. Next slide, please. We have done a comprehensive competitor analysis of the various fintech services the various apps offer. We see that Paytm, Google Pay, and Finserv Pay app highly overlap in the services that we offer in the Markets app. They are widely accepted and have a strong user base. We also need to present a strong value proposition like Bill Now, Pay Later to lure our customers. Now, Jotpreet will talk about the customer acquisition and retention strategies.
Thank you for that, Ashish. Now we talked about all the ideas, but it is no good until it turns into real benefit for Bajaj. So here we have outlined a strategy to acquire customers. If you look towards the left, we plan to target the 25 plus salaried and digital savvy customers who are currently not a part of the Bajaj ecosystem. We plan to launch large-scale influencer marketing campaigns by partnering up with the likes of Ankur Warikoo, Akshat Srivastava, and CA Rachna Rendu. We will partner with them to create brand awareness for the Markets platform. In addition to this, we will scale up our digital ads and focus on audiences via Instagram, Quora, and LinkedIn, since our target customers spend the most amount of time on these platforms. Finally, we also intend to launch and enhance the financial awareness programs to catch the attention of potential users and make them aware of the financial universe and offerings of Bajaj. Finally, if you see to your right, we have demonstrated how the customer journey funnel would look like. We would lure them into the ecosystem using our Bill Now, Pay Later feature, which is our main attraction. From there on, as the user makes regular payments, we will build data on the customer. Using this data, we will upsell them to credit cards on the basis of our estimation of their credit worthiness. Then, we plan to sell them wealth advisory and investment products via the financial advisory marketplace. Finally, at the end of the customer journey funnel, we shall upgrade them to higher ticket products like personal loans and even home mortgages. That is how, dear panelists, we plan to capitalize on our ideas, as well as Bajaj's capabilities to cross-sell to customers to create a loyal franchise leading to a profitable business model for the Finserv Markets app. Now, I would like Kanish to take over the implementation and the financials.
Thanks, Jodhpreet. So here we have chalked out the implementation plan for both our features. We have divided the implementation in 3 phases, which is planning, tech development, and launch preparation. So in advisory marketplace, the major activity would involve onboarding the advisors. And in the BNPL offering, the major activities would involve tie-ups with NBFCs for funding the interest-free credit, and increasing the billers would be the main activity which will be undertaken. Moving on to the financials, we have identified a few monetization options from our 2 features. So revenue model for advisory marketplace would primarily be the commission from advisors for their services. Further, there would be increase in distribution income from cross-selling due to the advisory platform. Moving on to BNPL, revenue from BNPL feature would primarily be the merchant commission from automated bill payments, similar to the zero-cost EMI offering by Bajaj. From these discussed initiatives, we project our user base to increase by 7 million in a span of 5 years, with us spending on customer acquisition of around 115 to 120 per customer. Other potential sources of income would also be from the increased GMV from eStore, implementing our tactical improvements, and the user commission for one-to-one bill payments like rent, etc. Finally, we believe that our proposed ideas would help Bajaj get more customers into the funnel and also traverse each part of the customer journey. With this, we come to an end of our presentation, and we are now open to questions. Thank you.
Okay. Firstly, let me just start by saying, very well researched and well thought through presentation. Quite a few innovative thoughts in there. I particularly like the idea that you had come up with, which is almost sort of like a Practo-based advisory listing platform. Right? I do have a few questions on that though. So like in Practo, you have sort of users rating the doctors, and there's a 1 to 10 kind of a scoring. Are you visualizing some kind of a similar scoring like that for the independent financial advisors as well?
I'll take up that question. Thank you, sir, for your wonderful remarks. And to answer your question, sir, we do envisage a user feedback mechanism wherein using which we will benefit twofold. Once the user reviews, it will be seen by other users, and even Bajaj can see and rate the advisors on the platform. So we can gauge what is the customer feedback of the advisor on the platform, and we can work with them accordingly.
Okay. And would they be able to sell only Bajaj products in this, or would they also be able to sell other products on this platform?
I'll take this one up again. So, sir, we wish that they would recommend all products, since Bajaj Finserv Markets also has a bouquet of offerings from multiple companies. So we do not want to restrict them to just Bajaj offerings, although definitely that would be encouraged, but we do not foresee in our plan, we do not plan to only and only recommend Bajaj products, so that the more customers can be targeted. And as we showed you, we also plan to basically lure them into the ecosystem and plan an entire funnel and not just this advisory product.
Understood. And if I understand you correctly, you're intending to charge the advisors for this service. Is that correct?
Yes, sir. Yes. So we plan to charge a certain percentage on the advisory fee that will be charged to the customer.
Right. Now, are you aware that in the industry, there are already platforms which they can subscribe onto, which are offered by other larger distributors, and so you can become a sub-broker in a sense, which is by and large free. So why would an advisor pay for something like this?
Sir, I'm really sorry. Can you just repeat the last part of the question?
Why would an advisor pay for a service like this, which actually then increases transparency around his performance, when he can actually be part of a similar platform, which is already there in the industry? So large players like NJs of this world actually already offer such platforms for sub brokers. and there are also informal, chains that are created in this industry. Why would an advisor want to pay for this service when he is getting it for free with much lesser transparency on his performance?
Got it, sir. So definitely, but that would be shorter term thinking. So what we're planning and what we foresee with this question is that the value proposition for the advisors would be the access to a more number of customers, which they were not able to cater to before. And we are saying that we will charge not the advisors directly. So when the user agrees to pay a certain amount of money to the advisor, we'll take a small percentage cut. And it's not as if we're going to charge a very high percentage that will take away a lot of the benefit that the advisor might accrue. So we see that the benefit of the larger number of users would be a key. Would be a key factor why the brokers or the advisors would actually look to onboard onto this platform and not say become a sub broker of some other entity.
Thank you.
I have a question.
Yes, sir.
Very comprehensive work. You build that product, bill now, pay later, right? What are the revenues you believe is possible from that product? Hello?
So we have accounted for two possible revenues from bill now, pay later scheme. First would be the BNPL late fee charge. If a user defaults on his monthly bill payment, he'll be charged a late fee. So in the market also, players like HDFC and LazyPay are charging to the tune of 15 rupees per day or 2.33% per month kind of a scheme. Second, our revenue mainly involves this merchant commission from the billers.
Okay, and what will be the expense items?
So expense items primarily would be the interest cost, for which we will have to tie up with an NBFC, and other primary costs would be the IT infra costs and employee costs. That's it.
What about bad debts?
So bad debts, perfect. We have also incorporated bad debts in our model, but we believe markets as a standalone entity would not bear that bad debt, since this is being funded by the NBFC. So the loan would be on NBFC's book, and the bad debts would also be borne by the NBFC.
You don't intend to charge consumer for this fees, for this service?
No, sir, we don't intend to charge the consumers for the service, because the idea that we have about the service, we need to increase users' retention on our markets app. And we are using the service to make sure that the users are retained on this on our app, and then we'll upsell and cross-sell them. Through that, we'll make money from our consumers, but not directly through the service.
All right. Thank you. Thank you. I don't have more questions. So
Thank you so much, sir. Any more questions from the panelists? Okay, I think we're done here then. Team soda water bottle opener wala. So I think, yeah, you guys can now, you can stop raising your hands. So all the panelists, you would now get a request to join the breakout room. If you could please do the same.
Once you are done, we'll again log you into the same link, and then we can announce the winners.
Right.
Meanwhile, while they are in the breakout room, we can call upon the last year's participant, Neil Oswal, who was an Atom participant and has joined as a GYLP to share his experience about Atom as well as about the GYLP program as such.
Hi Niranjan. Hello, hi Niranjan. Glad to be here, and great to see all the participants again giving up great presentations on this platform.
Yeah. Can we have Neil on screen? And also, Neil, if you can share some experience about the Atom, the last Atom which you were part of.
Neil, if you could raise your hand on the screen,
Yeah.
or you're on the screen. Cool. This works.
Yeah. So I think Atom last year, the experience was amazing. The kind of learning I had from Atom is one of the best during my second year case competitions. So we had a wealth management solution that we had to provide, and which was a very real world problem. Unlike some of the other case competitions, so ideating and articulating solutions for the same was more interesting since it was a real world problem. Secondly, we had a campus round, a regional round, and national round. So at each round, the inputs from the judges were really valuable, and we tried to incorporate them at each stage. And overall, it is a very holistic case competition wherein there's a mix of financial feasibility, there's a mix of strategy, operational challenges, competitor benchmarking, and all in all, it's a very great platform to learn under the guidance of some of the senior leaders who give feedback to your overall performance. And I think I have really good memories from this entire experience.
Thank you so much,
Yeah,
Neil, for your valuable
Mm.
insights.
I believe it's been more than 8 months, right, since in your first stint as a GYLP, right? So can
Correct.
you shed some light on what was the experience like in these 8 months?
Yeah, so I'm reaching the end of my first stint, and this stint I was in Bajaj Finance Limited. And overall, I think at a group level, this is a very diversified group. Life insurance, general insurance, consumer loans, fintech, payments, rewards, you name it within financial services, and it's part of this group. So I think that was the best part. Second thing is in terms of your the roles. You have product management, you have strategy, you have operations, you have execution oriented work. So there is a plethora of options to choose from, and the kind of exposure on real world problems is fantastic. Even the work culture is something which I really liked about this entire 8 month stint. So all in all, I think it's an extremely satisfactory experience being part of this GYLP program.
Great.
Thank you so much, Neil. I think we also have Dhruv Bonagiri, who was the last year's winner of Atom and also a part of GYLP program.
Yeah.
Can we have Dhruv on screen, please?
Hi Niranjan, hi Malvika.
Hi, Dhruv. How are you? Welcome to the Atom CEO's Challenge. Once again, you're back on Atom. So, Dhruv, if you could run us through your experience with Atom and how it was, how what you learned through it, and how you're probably using it here at your stint in Bajaj.
Yeah, so firstly, seeing these presentations brought back like really fond memories. I know how stressed probably the participants are right now, and they're really, by the time the judges come out with your decision, just your heart is in your mouth. So hang in there. Atom last year for us, it really changed my life. There was a complete 360 after Atom. It's one of the competitions that makes you really think. It's not just about the strategy, but you also need to get buy-in from your peers because they have to invest in your idea, and then how you use the money that people have invested into you. So that's really unique. Other than that, there are real problems faced by the industry, not just by Bajaj. So the problem statement we worked on was around the super app, and then now in the GYLP program, I am working on that project. So it is like a complete circle, So other than that, like Neil said, so getting that time and that feedback from senior leaders and from everyone who actually reviewed our presentations, so it really refines you. So that was also something which was really great.
Great. And what about your GYLP experience? I think it's been 8 months too for you towards the end of your first stint. How's it been? What have you gotten to learn? Which department are you working in?
So yes, this is like towards the end of my first stint. So I'm working with the project management team, and we are working on the super app at Bajaj right now. I think the team before this was also presenting something related to the super app. So that's how it is. Once you get into a GYLP program, you do get to work on problems that are faced in Atom. They are high visibility problems that are there, and you get to meet a lot of top management, the high priority. There's a lot of running around. It's tough. but it's worth it. And you get, the best part is you also get to go to another company. So there's different culture, different projects, different roles, and then you decide your best fit based on that. So that's something I think which is unique in the industry. Very few groups do something like this. So yeah, it is something that you should look forward to join.
Absolutely. Very rightly put. I think this is something that even I mentioned earlier, that even though we're Bajaj Finserv is one group company, there are very different cultures, very diverse sort of leaders that we have across all our different companies. And I think GYLP is a program that gives you that exposure to actually go and experience that in your first 18 months.
And I think in terms of our preferences also, and in terms of the exposure also, we'll get a lot of different exposure. When the first stint or the first role gets over, the another stint which you get, and the kind of exposure you get from the next stint would really be different from the last stint. So that is something, you know, you can pick and choose at the end of your 3 stints over it. What kind of exposure do you really, what kind of industry are you really interested in?
Right.
Correct. So Niranjan, do you think we should like open the floor to our participants if they have anything to say before the final announcement of the winners? Do you guys, from all the 5 teams, do you all have anything to say? How was your experience today? Were you nervous? How did it go? Did it go better than expected, or was it expected, or was it as expected? So how did you guys feel? Come on, any one of you can answer.
Initially, it was pretty overwhelming when it started, and there were multiple rounds with a lot less gap in between the rounds. But then we got used to it, and now it's great. I'm really liking it today.
That's a piece of Bajaj for you, where this is how your even work will be like that. You have to, if you want to be a part of this fast-paced industry, you have to learn how to deal with that pressure. But I think you all did a really, really fabulous job. I think there was, each presentation was very different from the other. And that was something really great to see, each and every single presentation. Anybody else wants to come forward and say something?
I would like to mention that we got great insights from panel members. It was great, and it was a great opportunity for us to present in front of them. And not only for our team, we also looked at other teams' presentations and got great insights from that. So I'm really thankful for this platform and this.
Right. Trust me, that I think is something that you guys will never forget, because we've been doing it. I think Niranjan and I can speak for Niranjan also here. We've been with Bajaj for 1.5 years. And I think every single interaction with a leader just makes like you go leaps and bounds because of that one interaction, because they will share, they'll probably even tell you just one sentence, but that itself will probably be so motivating, and it's so deep that you'll actually have to go back and think about it. So yeah,
I agree. I completely agree. The kind of so after a meeting, you'll probably think, oh, I've never thought this way, or this is the way I should really think about. So that is one thing I think after, and I'm sure most of the participants after the panelists spoke, they must have thought, yeah, this is another way to think about the problem which they have presented on, or maybe you can build on the problem statement, the answers to the problem statement.
True. Anyone else would like to go?
Also just like to add, like what was also very unique was that there were 5 different problem statements being presented by 5 different teams. So every presentation was unique in the sense it was solving a different case competition. So this felt like a bundled 5-in-1 case competition where, you know, the different industries being covered by Bajaj, you know, they were given part of the problem statement. So I thought that was also very insightful, because we were thinking in one angle, but another team was probably preparing something entirely different from what we were doing.
Right. That's very, very, very true. That actually did happen. I mean, I was lucky to be a part of a lot of the presentations, and I saw all of you all had a very different approach to the problem statement, which is something you will see when you start working also. Everyone comes up with different ideas, and which one you actually implement is what goes forward. So yeah, calling, I think we have our panelists back.
Yeah. So we have a panelist back. Can we log them in? Are they in the lobby?
Yes. Can we please have the panelists on the screen as well? Just give it 2 minutes, I think, and they will be here. Guys, just hold on to your horses for another 5 minutes. Soon the winners will be announced. You will know whether you have made it to Atom CEO's Challenge or no. But just before the winners are announced, to all the teams, you all were great. Best of luck for the announcements. But please don't go back disheartened for the teams that probably don't make it. I think all of you all, kudos to all the efforts that all of you all put in. Truly.
Yeah, the kind of detailed presentation they make, I was also, the Atom participants have grown each year. I think this fourth season, and I've seen the quality grow to a great extent.
Truly, truly.
So do we have the panelists in the lobby? Or
I think
yes.
no, not yet. No, they're still in the breakout room.
No, we have come now, Malvika.
Oh,
okay.
Hello, sir.
Which is not comfortable to us. I thought, let me remind you with that.
No, hello, sir. I thought it looked like it was you all were still in the breakout room. Okay. So yeah, Niranjan, let's call upon.
So, I'll call upon Tarun Chuk to announce the runner-up of the Atom CEO's Challenge. Can we have him on screen, please?
Tarun, sir, please. I can see Tarun sir's video. Don't see him on the screen.
You guys see me?
Yes, so we can see your video. Unable to see you.
And I am now speaking, so you can hear me as well.
Yes, sir. Okay.
Okay, over to you, sir, to announce the runner-up.
Okay, great.
Yes, sir.
Well, I must say before I announce the runner-up, it's been a grueling fight all the way through. I understand from my team as well. Out of so many people, the top 5 itself is a award in itself. So great job, all of you. For us, all of us in the panel, it wasn't easy to finally go and say, okay, who's better off on what many things, but then we've got a very structured way of looking at who to assign number 1 and number 2. I'm just going to be talking about the number 2 before Tapan talks about the number 1. In the number 2, I think it is a pretty close fight. And it is just, maybe maybe just toss of a coin eventually. But we do have a number 2 who does stand out. And जो bottle open करने वाले आए थे, वो अपनी bottle open कर सकते हैं और अपना सोडा निकाल सकते हैं. सोडा bottle open वाला is number 2. Congratulations, guys. And the reason you were selected by the panel, you were a judge number 1 almost by 2 judges on the panel. And then you were in the play for the number 2 as well. Was that we found your ideas pretty unique. You got nothing like a clap. I think that says it all. So let me not say much. Great. Enjoy. Open your bottles and have fun. Good one. Good work.
Congratulations, guys.
Thank you so much, sir.
Thank you so much, sir.
Guys, thank you so much, Tarun sir, for that. Congratulations once again. Now calling upon Tapan sir to announce the winner.
Thank you, Malvika. At the onset, I think all of us had a great time listening to presentations. I always love it, when I see the passion and the hard work which has been done. And as the kids are presenting, each one of them was very unique. So obviously, like Tarun mentioned, very difficult for Devang, Ganesh, Anup, all of us put together decide what and who the winner will be. But for number 1, at least there was clear majority in terms of who the number 1 would be. And I was thinking in my mind, the one who became number 1 is the one who bought insurance policies. All of them had a policy. So that team became number 1. It's so simple, I think in life, if you have an insurance policy, you become number 1. So I think the team which had all the health policies was the health team, Catalyst. So obviously, they clearly became the number one, which would be there. But I think jokes apart, on a serious note, they had really worked very hard, and they were able to take a question, and the sincerity and belief in what they were presenting was of the highest order. You know? I think that is what got them to be where they are. But the good part in the panel was that they were clearly unanimously judged as number one. So I think that was something which would be as a message to the other team also. Like, I think the genuineness of the presentation, which was coming through in terms of their belief in what they're presenting, and the answers they could give in terms of how and what was very, very, I think, realistic. So that is what got them this position. So hats off, and great job done. And the other teams also, I think, if I look at the Bajaj Pay, or if I look at the Generations team or the FinServ Markets, I think they also had a the life insurance team, they also had a very close fight. I think the miss, if I may say so, if I look at from Generations team, was they had some unique ideas, but in terms of the researching through was what is missing through. So the uniqueness of Generations team was pretty good in the ideation part. They put in a lot of very good ideas, but in terms of the depth behind that, that somehow got to left. If you look at the FinServ Markets also, they had a huge amount of ideas put together, thought was put together. But again, the depth behind us, as it should be, was something which was getting understood. Life insurance people also again very close to coming to the second position also in terms of how they were getting position. So if I look at it in the second position, it was a very close tie. It was and for these small reasons, you all missed out. But as Tarun mentioned, you coming to the top 5 itself is a big win. So I thought just give you a comprehensive, so you're aware as to what you missed out and what you really gained on. If you have any question, I think the panel is here. We'll be very happy to answer if you have any question on the judgment by the panel, which we always believe in full transparency. So very happy to answer that. But I'll just give you an insight about what all we discussed as we came through. Over to you, Malvika.
Thank you so much, Tapan. So I think the smiles on all their faces, especially Aditi's face, I think says it all. They look super elated about the whole thing. Congratulations, Team Catalyst.
Congrats, Ashish, Chokri, Swayam Prabha, and I think Karan, Saurav, Aditi, and Nisar. All the 8 people who have
great work, guys. I would just like to add here that I know it's been 2 years of the pandemic, but I really wish we could have done this in person. But unfortunately, hopefully our next season is in person. Would have loved to meet all of you guys and interact with you. And it would have been a great opportunity for you to meet our senior leadership team. But anyway, congratulations once again. I hope you take all the lessons learned from here today, and actually you feel that those are really valuable feedback.
So guys, thank you for your time. We had a great afternoon, great PPTs and innovative ideas. Now I'd like to call upon Garima for the final closing ceremony.
Yes, welcome, Garima.
Thank you, Niranjan and Malika. Good evening, everyone. When we started working on Atom Season 4, we spent quite a lot of time deliberating on this new proposition, setting up the framework, engaging with internal, external stakeholders, and all to ensure that Atom Season 4 is a great success. Today, when we are at the end of it, we understand what a journey it's been and how it would have been impossible to reach here without the support of a few people. To start with, first and foremost, we would like to thank our esteemed panel of judges who have taken out time from their packed schedules to listen to these young ideas and helping develop talent from these prestigious institutes. Thank you so much, Tapan, Tarun, Devang, Anup, and Ganesh. We hope you enjoyed these sessions as much as we loved having you on board with us. This journey would not have been a success without participants who have been actively engaging and solutioning with us for the last 2 months. Thank you for making us one of the top B School campus competitions today. In this entire journey, we all know there were multiple evaluation rounds followed by mentoring, coaching, feedback sessions, jamming sessions, etc. And throughout this, we had the support of our internal leaders always who were willing to be a part of this process. A special shout out to Samir, Saurabh, Vikas, and Shashidhar for spending extra time with us to frame these problem statements. We've always had the constant and unflinching support of the HR teams of every company who have undergone these robust 2 months with us with a continuous smile. Thank you all. And lastly, to conclude, thank you to Vaibhav and Deepak for their constant support and belief in making me see through this. Thank you everyone for joining in today and hope you all have a great evening.
Thank you.
Thank you, everyone.
Thank you.